They don't need it. I mean, look, if the government's going to, if there's a Chinese problem where they are about to like shell Taiwan, I mean, they're going to need government help. But Taiwan Semi did not need the money. I keep coming down to the balance sheet. You can look at a balance sheet.
I get it. My point is simply that when the government is in a position to say, in the case, for example, of the Chinese license to sell in China, when it's in a position to say we will allow this, are they now going to add on and we want?
Yeah.
So, again, I come back to an area that I've followed for a long time. We're going to allow this transaction. We are going to allow you to merge. We're going to allow this rail deal to happen. But, for the sake of the American people, we'd like 10% of the combination.
Well, it is. Why
what
not?
is that?
Also, Constitution's pretty explicit about taxing exports, but not that even matters anymore.
In the Constitution.
What a joke.
Hey, look, when I went to law school, the Second Amendment meant nothing having to do with gun control. It was about having a militia. Now it's like, hey, that I guarantee you the right to have firearms. I mean, the Constitution is fungible. Okay, it's fungible. I don't want it to be, but I was like shocked that everything I learned in law school about the Constitution turned out to be a joke. Right. I thought it was serious. I'm actually worried about whether I got an A.
You mentioned NVIDIA, guys. Price targets on NVIDIA, the average price target going into tomorrow night is up almost 8% in a month. That's the fastest increase in all year.
Okay, so I'm going to deviate from the orthodoxy. Right now, the orthodoxy says, what's demand China? What's demand China? No. It's about the total cost of ownership. Is NVIDIA priced too high for its customers to make money? That's the issue. That's the only issue that you need to worry about. Like, take the case of Amazon. I think Amazon's trying to figure out the return of investment. And I think they may think maybe it's not as great as what they do when they do this trading, which is their own chip. So, David, I think the issue here is not China. It's has NVIDIA gotten too expensive? Or are we going to hear, like, it's the usual? And Jensen was going to say, look, if you can get a chip that can reason, well, good luck. Go ahead. Go get the one that can reason. It's kind of like, let's say when I see these CEOs and they really disagree with me or they're angry, I always say the same thing. I say, listen, you came on the show, I asked you tough questions, you answered them foolishly. I am going to watch your show tonight to see what you say about me. And they always say the same thing. I don't have a TV show. I say, well, that's a point.
I think it was Webbush yesterday saying that demand supply is running 10-to-1 for NVIDIA right now. It's like the Labubu of chips.
Look, these chips, when we hear what I think Jensen's going to make a case, which he doesn't even need to make, just saying, listen, you don't need them? You don't want them? Go ahead. Make one. It's kind of like he's not really Clint.
He's not Clint. No, he's not Clint Eastwood-esque.
So is this what you meant this morning when you said that too many cross currents, you're not buying until things get cheaper?
Yeah, because people are looking for this China number, and I think that if they're looking for the China number, it's not going to be about that. It's going to be about how much you make when you buy, how great it is to get one of their chips, and why it's got that ratio. Because the hyperscalers are under a lot of fire in the media for spending too much on NVIDIA. And I think that after you listen to that call tomorrow night, then we won't have the cross currents. It's going to be like, holy cow, how do I get one of these? Because the new chips are going to be what makes it so that right now it feels still like, who am I in here right now? I'm reusing ChatGPT about the Lockheed. And I'm like, oh, please be right. Please be right. I'll feel like it's a lot more right. And it's also going to say, what are you really talking about here? You need to know, are you talking about what Lutnick said this morning? Because let me tell you what I think. That's what's going to happen. It's going to be like me talking to you. Oh, no.
Really? Full of only factual content?
No, it's full of sound and fury signifying nothing.
There we go. All right,
I do love you.
Thank you. I love you too.
And I don't want you to be taken over by ChatGPT 6. I find that would be nauseating to me because, I
will never be taken over by. I would rather. I will go away before I will allow that to happen.
But how would ChatGPT 6 move his daughter into the door?
They can't.
Right.
They can't lift boxes and throw out there.
Until the humanoid
and
comes
throw out their back. By the way, I'm in for that. All right.
Right.
Yeah. No, whatever the robot comes along that can move boxes and all that other stuff upstairs. Great.
Jensen's going to end the real discussion. He's going to just say the total cost of ownership is it's fabulous. It's one. And by the way, Core Weave will back him up on that. Michael N. Trader.
Yeah.
I don't know if you know him from Jersey.
Yeah. I know. Whoa. All right. I want to talk about an enormous deal.
When we come back, back on. I am going to come out hard against you.
Okay, fine. I'm going to talk about AT&T and EchoStar right now, right?
Wait till we come back from the break. Wait till we come back from the break. People care.
No, we're going to talk about it now. Because we're going to run out of time. Don't you know how the timing of the show? He's been on the show for 100 years. He has no idea how the timing of the show works.
You
still don't know.
How much time back?
Yeah, he never knows.
How much time back?
Jeez.
He doesn't have any idea.
That was before there was a Peacock.
We got 5 minutes, all right, before we got to hit a break. All right,
I'm going to talk about Mr. Peacock.
Take a look at shares of, actually, EchoStar is the one that is really benefiting. $23 billion for Spectrum, AT&T.
I thought you told me EchoStar had nothing.
And it's a deal that really only AT&T could have done. When you look at MoffettNathan's, for example, they say, listen, that 3.45 gigahertz Spectrum, Verizon had already made its bet on C-band. T-Mobile recently sold all of its 3.45 gigahertz Spectrum. So clearly AT&T was the only one that could have done it, and they did do it at $23 billion. I'll get to this later. This is about EchoStar, but I want to start off talking about AT&T here, obviously. They take their leverage up to about 3 times. They're going to take it back to 2.5 times. This is in no way endangering their share of buybacks. But John Stankey, who was on Squawk Box this morning, did talk about what it will allow them to do in terms of accelerating growth. Take a listen.
I feel like this is the last building block from an asset perspective to really have us in a position to be the best in the industry. And we're really excited about it because it's going to accelerate our growth. It's going to dramatically improve service. It's going to be good for consumers because it's going to take fallow spectrum that hasn't been in service and move it out there pretty quickly. And we think this is a win-win all the way around, not only for our company, but for consumers.
And generally being viewed that way by many of the analysts who follow AT&T and or EchoStar. Now I'll come back to MoffettNathanson, who's forever been kind of negative on AT&T, and correctly so.
Yeah, remember I changed my mind after you browbeat me. So
I did. But when it comes to EchoStar, this is a company that many people were still concerned would be bankrupt at some point. In aggregate, they say the realized price that AT&T is paying, remember they didn't have competition, or so they say, is well above what EchoStar paid for the Spectrum many years ago. They're going to have a pretty significant tax bill, but they say this bodes well for the thesis. EchoStar is in now full liquidation mode. That is a welcome development, so there may be more spectrum they can sell. They're now going to be leasing essentially the spectrum that is going to be put into operation by AT&T for their own Boost Mobile. So it's an MNO, what they call a mobile network operator. They will be using AT&T's spectrum to do that. All of this goes back to the enormous purchases that Charlie Ergen made when he was transitioning this company from a direct broadcast satellite company, remember Dish, which still is part of EchoStar, of course, into one that was going to be a nationwide wireless company. Yeah. He never got there. He never did the build-outs that were necessary. Did some, not a lot of the other. Enormous capital needs, of course, were always a key question. And so they took on a lot of debt to buy a lot of spectrum, and they were finally under pressure from the FCC to actually build it out because they had failed to meet certain deadlines in terms of which they were going to put that spectrum to use. This sale now takes care of so many of those concerns, bringing in an enormous amount of money that, as you heard MoffettNathan say and others, certainly takes the specter of bankruptcy completely out of the picture. The question then becomes, will they continue to liquidate, and what will happen from here? There will be, at least in some analysts' view, a fairly significant tax liability given the capital gains, but it is bringing an enormous amount of money in. And of course, when you go back, as I do with these guys for so long, I can remember when AT&T, Randall Stevenson and Charlie Ergen were negotiating for AT&T to buy Dish. They never got there. That was in the late 90s. Almost a $50 billion deal back then. Probably wouldn't have been a bad idea for Ergen to have done that at that point. But to the extent that people thought he was finished, no, not done. Clearly figured out one more hand he could play to bring in a significant amount of capital for his company. And as for AT&T, you know, this does fixed wireless, Jim, which we talk about so often. This only increases their capacity to bring that to certain areas where they don't already have fiber. Right. Remember, that is a very important component of their overall strategy, is fiber. But that said, we've been talking a lot here about the competitive aspect of fixed wireless additions from AT&T, Verizon, and of course T-Mobile, which was sort of first into that market, and what that has meant for the incumbents, namely, in broadband, namely Comcast and Charter.
It blunted a piece this morning about how Comcast is a positive catalyst.
Yeah,
watch.
Citi, I think, right?
Yeah, so this is a post, they did this post the positive catalyst watch.
They did, and you do see Charter down 2.6%. Comcast, our parent, still for a few more months is down about 0.5%, as he said, despite what was a positive research piece.
Price target.
And then, people are trying to figure out what this means for the towers as well, guys. There are a lot of tower leases that EchoStar has that will still remain in effect. So that, in a sense, is a component of their debt. But overall, perhaps seen over time, maybe it's a positive for towers. But we'll see. Crown Castle is down almost 3%.
Yeah. I think that the one thing that you made a mistake of is that you have come on repeatedly and said Charlie Ergen always has more cards. You did.
I have, but frankly, many people thought he'd finally run out of cards.
But not you.
Yeah, well, I did wonder as well. We last September when they tried to merge Dish and DirecTV.
Yeah.
That didn't happen. But you're right.
Made a lot of money today.
Somebody made a lot. I mean, this was, by the way, they kept this one quiet, put out by press release, no leaks.
No.
But you can see the enormous increase in value for EchoStar.
But it does make stanky. AT&T is just doing everything right.
AT&T, $206 billion market value, well above that of Verizon now.
There you go.
Yeah. Kind of says a lot, doesn't it?
Geez, as soon as you say that, I remember, Carl, the whole hope with Comcast, with the company we work for still, you had to hope that other people didn't move into fixed wireless because you just don't want the competition. Now, I am sure if you ask anyone at Comcast, they say, don't worry. I mean, the don't worry. It's like, after a while, I'm worried about the don't worry.
Yep. Yeah, well, they no longer have media to worry about, so they can just do their thing.
Right.
Comcast?
No, AT&T.
Oh, AT&T,
yes.
Yeah, I know.
Yeah.
Wait. Yeah, they don't have that to worry about.
No, they don't.
No, that was actually a good deal, potentially.
I told Stanky I surrendered.
You did. You finally surrendered.
No, at 23 I surrendered.
Yeah, you did. You did. You did. You came around.
Well, look, I hate talking about the company I work for. I just do know that it's crowded field. What can I say? It's crowded field. Versus NVIDIA. See, I want to be NVIDIA, not Comcast. Not a crowded field.
Well, what's your feeling right now? I think we did get some additional selling by Carp on Palantir.
Oh, no, wait a second. That was a program. It was listed before. Yep. It's not something new. I think that Alex Karp is, as I've indicated, the smartest person ever lived. What did I say? What did I say wrong? Well, you got Da Vinci?
You completely thrown out any valuation parameters when it comes to Palantir.
It's like with the president.
It's
so different.
You're just a momentum guy. That's it. That's what you are in this thing.
For Palantir.
Yes.
Well, no, I am not. I am just saying there's all the stocks I've ever seen, and then there's Palantir. There's all the CEOs I've ever seen, and then there's Carp. I'm just doing a carve out. I carve out like the Fed.
Like the Supreme Court.
Yeah.
For the Fed.
I'm doing a carve out here for Alex Karp.
Got it.
Who, by the way, I'm not close to it all, and he doesn't care for me, and I don't care because I'll watch his show.
The stock has definitely had support at the 50-day since.
There he is.
Going back to 200.
Yep.
He's good. Look at him. He's happy there. He doesn't
Very
remember.
jolly fella.
Yeah, and the book. I read the book. I got the book. They sent me the book. I mean, what am I going to tell you?
The book.
Aristotle. I mean, what was Aristotle's rule of 40? What was this rule of 40? Think about that.
Meantime, very flat tape. Dow's down 13, S&P's down 5. Durables came in a little bit better than expected. X-Trans, best month-on-month gains since September. Put that together with some PMIs lately. Good sense that the economy might be finding some legs.
If I were Cook, I would come out today and say, I think you should tighten. What a roundhouse.
The Taylor rules of the degree. There's a look at the curve.
Time to tighten.
We're back in a moment.
in the market.
Keep your eye on Interactive Brokers today. Going to replace WBA in the S&P. We're going to talk to Thomas Petterfy in the next hour, I believe. But year on year, it's a double, up 100%. Not quite a Robin Hood performance, but certainly better than the market overall. We'll get Stop Trading with Jim in just a minute.
For certain.
Let's get to Jim and Stop Trading.
One of my favorite executives is David Ricks from Eli Lilly. He came on after that last trial, and that was the a trial for weight loss, obviously, August 7, 225. He said, look, our stocks shouldn't be down that much. I mean, there's a lot more things in the pipeline. He then bought 1,632 shares at 645 August 12th. Saying basically, look, we're not bad. Well, of course, the new trial, another trial came out today, August 26th. Same kind. The misinformation thing is so legion. You got to listen. This trial attained to said this the population was adults with obesity or overweight and type 2. That's important. The and, okay. The previous one was just without diabetes. They had similar results. Everyone says, "Oh, what are you on?" No, if you include people who have diabetes, it's much harder to lose weight. So this trial is dramatic because if you exclude that population and you take a pill and you're heavy, you're going to lose a huge amount of weight. This is a gigantic win. Is it worth 31? No, it's probably worth maybe 80, 90. So, I mean, people did, it was apples to orange, but the apples to orange, the orange is a tougher group of people to lose weight. David Ricks is so good, and I wish he'd come on orange because he could have explained very quickly, please, there are many more pill studies. But, he wasn't pressed on it. He's hidden nothing.
He's a frequent squad guest.
He's great. Have you met him?
For the year to
He's
date,
dynamite, man.
For the year to date, stock's been up 20. It's been down 20.
Well,
it's still trying to get out of the red.
Now I think this is the real deal. I saw him and Kim Chesky next to each other at McDonald's and him in a dinner, and it was like cause and effect. hamburger. Come on, that was good. Oh, you weren't paying attention. Just the story of my life.
The viewers got it. The viewers are with you.
When they replace him with ChatGPT 10, it's going to be like, you are so smart. Yes, I am. Well, I'm going to come on your show tonight. Thank you very much. It's going to be terrific.
I can't wait.
What are you going to do?
Nothing. I'm going to sit back and get license fees.
Yes.
That's what
David,
I'm going to do.
You know what? When this happens and someone says you have to go, I'm going to say...
As usual.
Right, okay.
Jim, we'll see you tonight.
Absolutely. Great show.
Mad Money.
Was it?
Brian Ling, nice.
Yeah, we're going to do a little private company.
Very nice.
Yeah.
Pretty even open here. Dow's down 10. Stay with us.
/plus.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Mike Santoli, David Faber, live at Post 9 of the New York Stock Exchange. Sarah Eisen has the morning off. Bit of a mixed bag this morning. Pretty even tape. Dow's down 5. Got a few sectors up, a few down. But overall, watching for Okta, MDB, and PVH earnings tonight. Long bond 493. The VIX is back above 15. Today, the president says he's firing Fed Governor Lisa Cook. Cook says the president doesn't have the authority and that she's not stepping down. What all that means for investors in the future of the Fed independence. Jefferies strategist and Fed chair contender David Zervos will join us in a few moments with his take. And then Interactive Brokers being added to the S&P 500. Thomas Petterfy will join us with his reaction to that news coming up.
New consumer data just crossing. Let's get to Rick Santelli, who has that for us. Rick.
Yes, David. This is August read on consumer confidence from the Conference Board. 97.4 is the headline, better than expected. However, not sequentially higher than the big revision. Last month, 97.2 now becomes 98.7. And if we look at the present situation, 131.2, that follows 132.8. And finally, expectations, 74.8. And it is following an upward revised 76.0. So not one is sequentially higher than our final July reads. Now on Richmond Fed, on the manufacturing side, -7. That's a little better. We're expecting -11. What's interesting here is that is the best read since it was -6 in March of this year. Comping to a negative number, never good. But if we go to the business side, the service side, a little bit better, a positive number, up 6. That follows -8. Up 6 would be the best. Well, just since June, we're positive 14. If we look at the market, right now we're at 369 in a 2-year. That's where the market was before the 830 data, and before this data hasn't really moved much. It's down 4 basis points. 10-year at 428. Similar. It's really been hovering right at that level. We do have auctions at 1 Eastern. Today there'll be a 2-year note, 69 billion. Tomorrow, 5 years at 70 billion, followed by Thursday, 44 billion, 7 years. Mike Santoli, back to you.
Rick, thank you very much. Well, President Trump says he is firing Fed Governor Lisa Cook over alleged mortgage fraud. Let's get to Steve Leisman with the latest. Hi, Steve.
Morning, Mike. Yeah, more questions and answers this morning about the independence of the Fed, the power of the president over the central bank, and, of course, the more important outlook for monetary policy when it comes to markets. The president saying he fired Cook for, quote, allegedly making false statements on one or more mortgage agreements. Cook, in a statement last night, responded, quote, President Trump reported to fire me for a cause when no cause exists under the law and he has no authority to do so. I will not resign. His questions include, is Cook actually fired now? We don't know the answer to that. Does the president actually have this authority? What will Fed Chair Powell do in response? Will he allow her into the building or cut off her email or whatever? How and when will the courts weigh in here? How much control does the president have over the Fed? Many, both inside and outside of the Fed, have viewed the attack on Cook as political, part of an effort to force the Fed to reduce rates, but also many wonder if the charges of mortgage fraud have substance that should force a resignation. Cook has not responded to the charges per se. If the removal stands, the Board of Governors would have only 5 of its regular 7 members. Chair Jay Powell, appointed by both Trump and President Biden. Biden appointees Jefferson and Barr, and Trump appointees Bowman and Waller. The president has nominated CEA Chair Stephen Myron to a vacant spot, so replacing Cook would give Trump a majority on the board. Fed probabilities changing only slightly in the wake of the firing. September remaining at around 82% of a rate cut probability, that is, in October at a 42% for a Fed cut, up a little bit. Overall, the market reaction, you've said this morning, is modest. Could suggest for now this is seen as a limited action by the president, who has some rationale for it, and that it does not concern the more important issue of the Fed chair. It could also mean markets don't think that much about Fed independence. Guys?
Steve, some references have been made in my X feed here to other cases such as that involving, I guess, Kaplan, Rosengren, Clarida. You obviously know all those people and the stories behind it, where there were some allegations of impropriety and they may have stepped off. Can you give our viewers some sense as to whether there is a correlation here between what may have happened with those cases and what this represents?
Well, I think in those cases, there were violations of, in both the Rosengren and Kaplan cases, issues of trading policy and violating the trading policies. These were referred to the Inspector General, and these gentlemen, I think, ultimately resigned before the Inspector General came out with their reports, perhaps from internal pressure to do so. And these were, I think, maybe a key distinction here, David, is on-the-job type stuff. They were on the job, and they were doing some trading that appeared to violate the Fed's trading rules. I think the key here also, David, and this is something that I think markets are wondering about, is this was handled internally by the Federal Reserve. So the Fed, in ousting these people or getting rid of them, was acting independently of the executive branch. The president never weighed in, as I recall, on those things. So that's a big question here, is ultimately, you could imagine, David, a situation where this issue with Cook is handled internally by the Fed that would preserve the independence and still meet the criteria of the president for getting rid of Lisa Cook.
Steve, appreciate that. We'll talk more about the market reaction later this hour. Here to talk about the potential fallout, though, Jefferies chief market strategist David Zervos, also said to be on the list of possible next Fed officials. David, it's great to have you. Welcome. We had a long discussion about the absence, at least so far, of an actual charge. What should she do?
Well, that's a tricky question. I think it's a complicated time. It's unprecedented, as you guys have said. Although, as you were just discussing, we've seen 3 different cases, and in fact, you could add in the Jeffrey Lacker case in 2017 of Fed officials, presidents, and members of the board that have had allegations against them that led to their departure in a pretty unceremonious way. So it's not that uncommon that we have some problems or some violations. The real question is it a violation? Did she violate? And does the president have the statutory ability to fire for cause? I think the Supreme Court will adjudicate that, and I presume the Justice Department will or the courts now will determine whether she actually did commit any sort of crime.
Right. How do you think that the carve-out for the Fed that SCOTUS has already given us might be applicable here?
You know, it's a tricky one because it was a tough one to read. That the Fed had this special privilege that really was hard to get to the bottom of in that reading when they allowed the FTC and the FCC and the CFPB heads to be fired. So I think that'll be interesting to watch. But I mean, there is a more general thing away from that, Carl, which is about just the sort of right of the president to fire for cause and testing that with the Federal Reserve. This is untested. So I do think that needs to be seen in the Supreme Court. Does the president have the right to do this? In the law, he does. The question is, who determines cause? What is cause? Is this cause, is this a high enough bar for cause? I guess is the real story.
David, to the broader question of Fed independence, and certainly what is the president's focus on at least exerting some level of control over the Fed, as somebody who's on the list of potential candidates to succeed Jerome Powell, I'm just curious as to how you think about it. If we wake up one day and David Zervos is Fed chair, are we going to sit here and say, oh, he's going to be Trump's puppet?
Well, I'm sure there will be people that say that. They say that about a lot of other people in the administration, and I certainly think you just have to thicken up your skin when you get to this town, Washington, D.C., and do your job. And your job at the Federal Reserve is to focus on maximum employment, anchored long-run inflation expectations, and price stability. And also recognize, David, something that I think is not recognized often by most people in the markets and most people that comment on the Fed, which is that there is a natural level of non-independence in this institution. This institution is a political institution, and you're going to get political pressures from all sides, from Congress, from the White House, from your own colleagues. And right now, I would argue, David, that inside the Fed, a decision to keep Lisa Cook in the event that she does have potentially charges against her that are valid, if they were to find that could be a political decision to keep someone on that is moving against the administration. So there's pressures inside, there's pressures outside. Politics operates in many different dimensions and directions in this city. It's not just unilaterally, let's protect the Fed from the president. We've got to think about all the politics that come from the Senate, the House, and also the internal personal politics that are on the board today. And those are large vestiges of the past administration.
No doubt. But I do wonder, David, whether the president's public campaign to get rates lower and, things that have been unprecedented in terms of his public attacks on Jerome Powell and obviously this move against Governor Cook, does it impact broader markets, in your opinion, in terms of the perception of Fed independence going forward?
Well, I don't think it does. And I think you can see that. Inflation break-evens in the tips market haven't adjusted significantly. Curves are a little steeper, but they're steeper all over the world. We're seeing it in the UK. We're seeing it in Australia. We're seeing it in Germany. So I don't think there is a question about credibility that's coming in here. I think there are reasons why term premiums may be rising globally, but that could be observationally equivalent to a lot of things that people might throw out as questioning Fed independence. I think as for the administration talking about its views on rates, why shouldn't we have an administration that talks about its views on rates, especially if they've got views that are helpful to the discussion? And I think they are helpful to the discussion in many ways. the administration officials' views that have talked about inflation not being as big of a problem post the tariff announcements and the rate structure being more restrictive than it likely should be, have kind of been vindicated by what Jay Powell did in Jackson Hole. He basically said, you know, you guys were right, which is what Chris Waller has also been saying on the board, and that's why he dissented, as did Mickey Bowman. So I don't see any problem with folks in the administration having discussions about one of the most important things in our economy, which is the level of interest rates. I mean, I think it's open game for everybody.
David, I don't think anybody would deny that the administration has the right to speak about its views on interest rates, the appropriate level of interest rates, how it interacts with policy and the economy. But engineering perhaps a majority of the Fed governors in order to execute some kind of an interest rate plan that is not warranted by the economy, that's where the markets would bump up against the abstract concept of Fed independence. The market's not going to overreact to this notion, oh, the Fed should be in this totally separate sphere. But if it seems as if the board is being steered in a direction to get rates lower than the economy should want or need, that's when it would become an issue.
Well, Mike, I think, you know, in your statement, I would only take objection with the sort of the idea that you're putting people on there that are doing something that's inconsistent with the goals of the Federal Reserve, which is price stability and long-run employment. I think you're putting people forward, and many of those people that are on that list of 10 that I feel very honored to be part of, I think have a view that more supply-side drivers are pushing the economic outlook. And if they do that, they think that there's more disinflationary pressures coming down the road, whether it's from AI and technology, whether it's from deregulation, whether it's from the one big beautiful bill that's got lots of incentives for investment going forward that have supply side drivers. You know, when you go onto that board and you think about making a decision, you have an economic view and a political view, and you say, what is your outlook for inflation? What is your outlook for supply side drivers, demand side drivers? And they're very different. I would say that those that come at it from the demand side are probably going to be more worried about the inflationary consequences of being at a 4.25% unemployment rate than those that come at it from the supply side. So I don't see this as the president stacking it with people that are doing something that's inconsistent with the mandate. They have a view that we could have stronger growth and less employment without the inflationary pressures that maybe some others do. That's just a difference of opinion on the economics that drive this economy. And those are going to be the like-minded people that come onto the committee, not the ones that are sort of use these Phillips curves and Keynesian models to come up with many times over many decades incorrect assessments of the long-term economic outlook and the outlook for inflation. So I don't think there's a stacking. I think it's just different views.
Well, if that's true, David, why are so many of the arguments out of the administration for lower rates, like their strongest arguments are not about prices, it's not really about employment, it's about interest expense, it's about mortgage rates holding back housing. Why should those be relevant?
Well, the mortgage rates holding back housing is a very viable economic storyline, and I think very real, and speaks to the distributional issues of using rates versus, say, balance sheet to conduct monetary policy. So I think those are real. The interest expense thing is definitely not a typical Fed discussion, but it does feed back into our debt sustainability issues and our overall debt and deficit issues that have escalated significantly since our extreme moves into these fiscal territories that are almost only consistent with warlike periods in the past. So I don't think there's really an inconsistency here. The story that I see, that I hear from administration officials consistently is this is restrictive policy. This policy looks restrictive. I'm seeing it in the data. We've seen it in the revisions that have come out of the labor market data. Whether you believe them or not is a different story. We're seeing it in the housing market. We're seeing it in the commercial real estate markets. There's a lot of places where restrictive monetary policy is rearing its head. And the question is, why are we doing that? What is the rationale?
Finally, David, while I have you, some of the PMIs lately, NFIB surveys on employment have actually suggested maybe a U-turn for the labor market to the upside. Do you think there's upside risk on August jobs?
You know, I think, well, we've come from a pretty low level, so there probably is no reason to think we're going to have some sort of collapse, and much of the data is humming along better than many of those recession forecasts might have predicted when we were all, hunkering down in the markets in April and May. So I don't see any catastrophe coming, but I do think there's a process that the Treasury Secretary has referred to as reprivatization that I do think kind of discombobulates markets for a little while, potentially the labor market, as we move to take folks out of the public sector and move them into the private sector. And so there is that hangover story that I think is still there and you need to be careful of. But, I don't see a lot in that ISM data. I think the real story is where do you see neutral? And I see it more toward 2 than 3. And I think we're just in a very restrictive place for monetary policy. And I'm not exactly sure why we're holding one hand behind our back when we do have some of these transitions to go through with the movement of the public sector into the private sector, the deregulation, a lot of the things in the One Big Beautiful Bill. There's just a lot of reasons to think that we could have some help from monetary policy in making those transitions, not something getting in the way of economic activity. And I don't expect it's going to be a big negative. And I think the economy could actually do fine with restrictive monetary policy. I'm just questioning, why do we need to do that? That seems like an overkill and putting ourselves through more pain than is necessary.
Right. David, good to get your take on the data and, of course, what's happening at the Fed. We'll talk soon, I hope. Thanks, David Zerbos.
Good to see you guys.
Get a look at our roadmap for the rest of the hour. Lilly is one of the best stocks on the S&P following that new data for its weight loss pill. We'll get some details.
Plus, speaking of the S&P, Interactive Brokers set to join the index this week, replacing Walgreens. Chairman Thomas Petterfy will join us to discuss the stock's inclusion.
And AT&T strikes a $23 billion deal to buy Spectrum licenses from EchoStar. That has sent shares of EchoStar up about 77% in trading so far. We got a big show ahead for you. Squawk on the Street, straight back.
Solar panel now.
Markets holding steady as President Trump looks to remove Fed Governor Lisa Cook from the board of the central bank during an already busy market week with investors awaiting NVIDIA earnings, PCE inflation, and more. Nuveen, head of equities and fixed income, and chief investment officer Sarah Malik joins us now. Sarah, it's good to see you this morning. Bundle it all together. I mean, we had this nice rally on Friday. It felt as if the market heard what it wanted from Jay Powell about the possibility of bringing rates lower into an economy that still seems okay. How does that feed into your market view here?
Well, markets are starting off the week on a cautious note for three reasons. We're anticipating NVIDIA earnings, which will be big for the theme of technology going forward. Second, of course, PCE inflation going to be an important factor for the markets. And third, what's going on with the Fed. I think areas to watch in terms of the impact are equities, which are showing kind of a neutral response to the Fed actions this morning. Fixed income, where we're seeing a little bit steeper on the long end of the yield curve, and the dollar, which is a tad weaker. But, on fixed income and the dollar, with fixed income on the yield curve, we've been expecting that curve to steepen for a while now and to continue to. So I don't think that higher yields on the 10-year are necessarily because of what's going on with the Fed. And for equities, this news on the Fed is going to be more headlines than it is going to be creating volatility. And the reason for that is because equities are going to stay focused on what's going on with inflation, earnings like NVIDIA, and also in terms of what's going on with the employment markets. So I think that there's less volatility around the Fed news with equities.
With NVIDIA coming tomorrow evening and this attempt, it's been fits and starts of the other parts of the market to try and sort of take over or participate along with the AI trade. How would you lean within that? What within the market looks like it's still ripe to move some from here?
Important with NVIDIA is that it's actually under-owned by investors across the street. So this is not a stock that's crowded in investor portfolios. And NVIDIA can earn in 2027 up to $8 a share. So on 2026 earnings, it's trading at about 25 to 30 times. So it is actually not an expensive stock. What investors are hoping for NVIDIA is continued extreme bullishness around artificial intelligence demand. If we don't see that level of bullishness, it would be a negative for the stock. If we see any hiccup on NVIDIA, it should be around perhaps supply chains and hiccups in supply production, but no hiccups at all on demand regarding AI. And we don't expect them to be anything but bullish around AI demand. Tech stocks in general are over 30% of the S&P 500's market cap, and they've accounted for about 2/3 of earnings growth in recent history. I expect that to continue, and that should continue to lead the U.S. market. So we are in the camp that NVIDIA earnings should be strong and tech should continue to lead the markets going forward.
You mentioned you've been expecting the Treasury yield curve to steepen, so therefore longer rates continuing to go maybe a little bit higher relative to short rates. Does that not complicate the equity equation, or is that what you'd want to see at this point in the cycle?
If it became too extreme, I think it could complicate the equity equation. It depends on why the long end is deepening. Partly it's because of structurally higher inflation, but if it's also for the right reason, which is that the economy will remain strong, I think that's a positive for equities. On the short end, for September, we expect base case a 25 basis points rate cut by the Fed, but August payrolls are going to be key here. If August payrolls disappoint again like they did in July, I think that does put 50 basis points of rate cuts back on the table, because historically, if the Fed has waited to cut interest rates until employment markets have cracked, that usually means that the Fed is too late and we're at increasing risk of a recession. So that employment number is going to be key on 25 basis points versus 50 at the September FOMC.
Yeah, absolutely. That is maybe the next thing that acts as a swing factor. Sarah, thank you very much.
Thanks for having me.
Still ahead this morning, the president says he's firing Fed Governor Cook. Cook firing back that she will not resign. We'll get more on the market fallout and what could come next. We'll ask longtime market veteran and Interactive Brokers Chairman Thomas Petterfy about it, along with the news that his company's getting added to the S&P 500. First, though, details on this new deal between AT&T and EchoStar, which is sending shares of the latter surging today to their best day, not surprisingly, on record. Squawk on the Streets, back in a moment.
Plus.
Welcome back to Squawk on the Street. Quick check on the infotech sector, one of the best performing groups this quarter, and helping it out, AI plays like Arista Networks, along with hardware plays like Western Digital. And also watch shares of AMD today as Truist upgrades the name to buy, saying more and more industry contacts are working with the company as an actual partner versus simply a price check to industry leader NVIDIA, up 2.25% today, getting back some of yesterday's loss.
Also keeping an eye on shares of both AT&T and particularly EchoStar, given the enormous gain in those shares. Some, you can see it, over 81% right now. Why? Well, a deal announced this morning, AT&T paying $23 billion for 50 megahertz of spectrum from EchoStar. EchoStar has owned the spectrum for quite some period of time. Remember, they bought it back in auctions that took place a long time ago, paying far less for it, at the time at least. But never deploying it fully, and that was becoming more of an issue for the company, where there had been recently certainly concerns about its ability to continue to pay its interest on its debt as well, in part because the build out for said spectrum required so much capital. It hadn't done it. It wasn't meeting certain parameters needed by the FCC for that spectrum, and so it was under pressure to either do that or potentially sell it. Now it does appear, at least according to some, that it's in something of a liquidation mode, and given the number it got for that, it has taken the spectrum bankruptcy completely off the table at this point. It does still have significant leases in place with tower companies and the like, but obviously is in a very different position, simply overnight announcing this deal with AT&T. As for AT&T, of course, this will enhance its offering to consumers, particularly in where it's become somewhat more aggressive, fixed wireless access, for example. Also just in general in terms of its service offerings, although fiber continues to be a focus for the company as well. And it's not really changing any of its plans when it comes to financial guidance or capital returns. This will take its leverage up, as some of the usage here is going to be from borrowings and cash on hand. So clearly we'll be borrowing and paying interest on that, but nonetheless will take its leverage target back down to the 2.5 range from what will be a brief period, at least it says, at 3 times, given the need for more debt, Carl, to fund this obviously very large and somewhat unexpected acquisition, at least in terms of the timing.
Right, but full year guidance intact and long-term guidance intact.
Correct.
Right. Thanks, David. Let's get a news update this morning with Silvana Hanam. Hey, Silvana.
Hey, Carl. Good morning. A whistleblower complaint reportedly accuses the Department of Governmental Efficiency, or DOGE, of putting the sensitive data of hundreds of millions of Americans at risk. According to a complaint from the Social Security Administration's data chief and seen by the New York Times, DOGE members uploaded a copy of a Social Security database to a vulnerable cloud server. The database has records of all Social Security numbers, full names, addresses, and birth dates, among other details. The complaint did not say the database was breached. A Utah district judge ordered the state to rapidly redraw its congressional districts in a move that could create another Democratic seat. Now, it comes after Texas and California passed their own new maps in a move that could swing the balance in next year's midterm elections. And Caitlin Clark is Nike's newest signature athlete. The sportswear giant says Clark's first signature shoe and apparel collection will debut next year. Clark has missed 24 games this year to an injury. Nike says she is one of the most watched and impactful players in the game, Mike. She sure is.
All right, Savannah, thank you.
Yes.
Coming up, Interactive Brokers chairman and founder Tomas Peterfy with his take on the growing Trump-Lisa Cook conflict, along with news that his company is getting added to the S&P 500. Plus, Eli Lilly shares rallying on positive news out of a trial for its obesity pill. The details later this hour. Don't go away.
and make it count.
Interactive Brokers will join the S&P 500 later this week, replacing Walgreens. And joining us this morning to discuss, Interactive Brokers founder and chair Tomas Peterffy. Tomas, welcome. Congratulations.
Thank you very much. It's only taken us 48 years since we started on the floor of the Amex as options market makers.
I'm assuming you think a lot of this is thanks to the volatility we've had in recent years, quarters.
Well, it's mostly thanks to the rise in the option markets, in the greater and ever greater volume in the options markets, because you see most of our customers are professional options traders. So that's why the firm has grown so greatly over the years. But this is a huge surprise for us because you see, we didn't expect this because it has never happened that S&P would induct a firm that is still more than 2/3 owned by the original founder. So, or for that matter, a firm that has less than 3,500 employees. So it's a fantastic surprise. It's great.
In general, I mean, and now that you're in the seat of inclusion here, is there in general a good way to trade a name that gets included to the index?
It's fantastic. Absolutely, yes.
What's your view on the options market overall? And I guess also as a corollary, the share of options volume that is retail driven. How's that going to shape up in the next couple of years?
Well, you see, it's been rising for the past 54 years, so I assume it will continue to rise.
In general, you don't see much that could throw this overall rally off course, do you?
Oh no, the rally is in good place because you see that much of the regulation, the doing away with the regulation, that's been a huge burden on business. So I think we are looking forward to a great stretch of next 2 to 3 years.
Tomas, speaking of obviously the stock has done extremely well this year. We've just taken a look, up over 100%. I am curious. You're talking about, I think, or you've said previously, indefinite 20% customer growth with no incremental capital needed. How is that possible?
Well, as long as you do better than your competitors, the customers come to you. So, but generally there is more and more recognition of capitalism and free enterprise and investment in free enterprise all over the globe. So it's still. There is still a huge runway ahead of the entire industry globally.
Yeah.
So
you mentioned, of course,
Interactive Brokers. It's the entire industry.
It's the entire industry,
and
right?
it's you, of course, because you're talking to these people, right? So it's a fantastic opportunity for this station also.
We certainly hope so as well, as we venture into the public markets to a certain extent ourselves as part of Versant. I am curious, you mentioned, of course, your own ownership of the company, Tomas. Does that pass to your son at some point? I know he's now on the board of directors. Is that your plan?
Well, I no, but our plan is to grow this business and to use our financial wherewithal to go into new things, such as forecast trading, for example, that is going to be our next big challenge, how to build that up, how to get our customers to see into the future through the lenses of economics and climate and politics and demographics and the financial markets. So you see, it's a fantastic opportunity to use a growing company, to do new things with.
Right, but again, you own more than 70% of the company. It's going to stay in the family.
Well, no,
is that your plan? All right, 68. Okay, roughly.
68.
Is it going to stay in the family?
I don't know how that will evolve. Yeah, but
You don't?
Hopefully, over the generations, of course, yes. That's my hope, yes.
Tomas, you mentioned, that this came as a surprise, the S&P 500 inclusion. It's a $28 billion market cap right now after this great run the stock has had. But of course, Robinhood has 3 to 4 times the market cap, even though it has 40% less revenue, right?
Hold it for a second. The market cap is 110 billion.
I'm looking at it wrong. They only have the float.
You're looking at the public float. You see?
Got it. Nonetheless, comparable market cap, you have 40% more revenue.
Unique situation.
Right.
Got it. You have 40% more revenue than Robinhood right now. And I've always wanted to isolate this. Is there anything a Robinhood customer can do that could not be done on the Interactive Brokers platform?
Well, I think there are certain crypto, certain coins that are not listed at Interactive Brokers, but most of them are. So, but there are very many things that customers can do at Interactive Brokers that they cannot do at Robinhood. I mean, we're basically addressing ourselves to the professional trader. Yeah. And I think our growth comes from all the billions of dollars we have been able to save for the professional trading community for over the years. That's what makes Interactive Brokers a fantastic idea.
Yeah. Maybe you should buy us, Tomas. I'm just thinking out loud here. I don't know,
I've been thinking about that too.
Have you? I don't think we're for sale.
You should say that.
Yeah, but it could be some nice synergy there, in terms of who we approach.
Absolutely. So, we're trying to work on that, by the way.
We can take that offline.
Well, if it happens, we're going to roll this tape, that's for sure. Finally, Tomas, I hope you won't mind, really quick, since we have you, if you'd be kind enough to give us your view. The street's wrangling with this notion of Fed Governor Cook and the president and overall Fed independence. You're from a country where central bank independence has been a story and a debate for years.
Yeah, so I would be in favor of central bank independence. Absolutely. Because, otherwise the economy would continuously change as the administration changes. That's not the right way to go on the long run. The central bank should be independent.
Tomas, congratulations on the S&P inclusion. Hope to have you back soon. It's always good chatting. Thank you.
Thank you very much.
Tomas Petterfeld.
All right, Eli Lilly shares in the green after positive results for its weight loss pill. More on the road ahead for shares, with one analyst forecasting double-digit gains ahead. He joins us when Squawk on the Street returns.
2025 has seen its share of volatility, but are we through the worst of it? Catch one expert's risks for the rest of the year and her advice and how to best position your portfolio for whatever comes next. That's in today's Market Navigator segment on Power Lunch, 2 p.m. Eastern Time.
Shares of Eli Lilly, take a look, up over 3%. The pharmaceutical giant releasing more data on its obesity pill. Patients with obesity and diabetes lost about 10.5% of their body weight. The new data clears the way for Lilly to seek regulatory approval. Guggenheim analyst Seamus Fernandez joins us now. He's got a buy rating on Lilly, price target of $875. So how do you take this news? You know, we got the previous data. There seemed to be some disappointment, perhaps, at the average weight loss. Has that faded?
Yeah, thanks, David. So I would say that the previous data was more an expectations game. People were expecting Wegovy exact weight loss, not Wegovy-like weight loss. What we got was Wegovy-like weight loss in the ATTAIN-1 study. Here, in this ATTAIN-2 study in diabetes, the results look very, very similar to what Wegovy has accomplished in other studies in diabetic patients. So ultimately, our conclusion here is orforglipron looks like a really well-behaved GLP-1 that can be taken orally instead of as an injection.
And is that the game changer that many believe in terms of what it will mean for sort of the masses, so to speak, Seamus?
I think in terms of scale, the big dynamic here is being able to produce an oral pill and have it easy to take. So we actually do think that this is a pretty meaningful step up. What the game changer is going to be is where Eli Lilly chooses to price the product at the end of the day. That's probably the greatest unknown at this point. But the fact that they have tirzepatide, a robust pipeline of additional injectable assets, and orforglipron likely to hit the market in the middle of next year, we think that the profile and the path forward for Eli Lilly is actually pretty exciting at this point.
And what about for Novo, which is obviously looking to similarly compete with an oral as well?
Yeah, so Novo, I think the challenge for Novo really is sort of the dynamics in the pipeline and its ability to launch new products at the same pace as Eli Lilly. Certainly, they're participating in the market in robust fashion. They are the number 2 player in the market in the U.S. at this point. Globally, they're actually the number 1 player in the GLP-1 market. So they're definitely, still a huge player in the space. But the reality is that, we think Eli Lilly is coming with a more robust pipeline overall, a lot of incremental opportunities to grow into this market, take market share. But I think the biggest hurdle for Novo at this point in time is going to be the scalability of their own oral pill. And then separately, it really comes down to this compounding issue that a lot of you know about with regard to HIMSS. That's an intellectual property challenge. There's a whole host of issues built around that and something we've never seen before.
All right, Seamus, got to leave it there today. A bit brief, but appreciate it. Thank you.
Thank you, guys. Great seeing you.
Coming up after the break, a look at how the AI arms race is bringing some big changes to a key part of the finance industry, Excel spreadsheets. We will explain. We're back in 2.
Insurance.
For nearly 40 years, spreadsheet mastery has been a rite of passage in a multitude of entry-level jobs, from investment banking to private equity to consulting, but that might be about to change. Leslie Picker's here at Post 9 with that story. Hey, Leslie.
Hey, Carl. Yeah, it's a really fast-moving space right now. Just within the last month, there's been a slew of AI product launches that aim to take on Excel or Google Sheets. One of them, called Shortcut.ai, went viral when its Excel agent was unveiled in July. The technology can build a discounted cash flow model from scratch in minutes. CEO Nico Christie told us that Shortcut is already serving thousands of paying customers at thousands of companies, mostly through individual lower-level employees.
The work that you do tends to be very time consuming, and I wouldn't say menial, but repetitive. And what you would rather be doing is doing what the associates and managers do at these firms, which is mostly reviewing the work that takes more time to do. So now that we can have AI that can actually do 4 hours of work in 20 minutes, it's a no-brainer in terms of ROI and making the switch over.
Christie said that ROI unleashed a battlefield in the race for superhuman Excel agents. Shortcut's parent company, Fundamental Labs, has raked in more than $40 million in funding from Process Ventures, Andreessen Horowitz, and First Spark, just to name a few. OpenAI just invested $14 million in something called Index. General Catalyst just seeded another company called Paradigm, and Google and Microsoft, of course, have been quickly rolling out AI features to defend their spreadsheet turfs. So far, none of these agents, though, are 100% perfect. They still require human oversight, especially in scenarios with legal, regulatory, or compliance implications. But the technology is improving by the day and is expected to have broad ramifications for Wall Street talent as well as bottom line efficiencies, guys.
So I don't need to know how to use Excel.
No.
So I can just go on and then do my and do a discounted cash flow model.
It's actually, I mean, it's kind of fun for, like, if you consider this type of thing fun, like discounted cash flow models, but basically you give it prompts. You say, I want to look at the Apple 10K using such and such assumptions and, this for a risk-free rate and building a discounted cash flow model. And within maybe about 10 minutes, depending on how difficult the prompts are, it'll crank out a model. You can even upload it from Excel and then change it into your company's kind of, font and exactly so that, and one of the key catchphrases when they launched this was try Shortcut before your bosses find out. In other words, do this, go to the beach. Your boss thinks you're working hard, but he'll never, or she will never know the difference because it looks exactly like what you could have done in 4 hours time.
So that whole World Series of Excel, the people actually compete for this, that's going to be obsolete.
So they actually used the model for that World Series of Excel, and it was able to do it.
Amazing. And just one more use case. We're going to start adding them up over time. LP, thank you. Leslie Picker. After the break, we'll go to Washington for the latest on the president's move to oust Fed Governor Cook. Plus, former Fed Governor Michigan's with us when Money Movers begins after this.
Famous to vote.
Play.
can save.
Plus.
Thank you very much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour, the markets, the future of the Fed, and some new reporting on Apple's AI ambitions. We are trading all of it with the investment committee as usual. Joining me for the hour today, Josh Brown, Jenny Harrington, Malcolm Etheridge, Brian Belsky. As I said, we are following the market story today. We do have news, of course, the president moving to fire Fed Governor Lisa Cook, the cabinet meeting about to get underway. So there's a lot at play in Washington. We begin with our top story today. Yet another report today that Apple executives have discussed the possibility of buying the AI startup Perplexity. This new one today from The Information says Apple has not engaged with Perplexity's management about that idea. And the reporting also said that Apple executives have talked about buying the smaller player Mistral based in France. So you have those developments, not to mention the fact that you do have an invitation that just dropped into my inbox, and I know Steve Kovacs as well. He's with us now on all things, I guess, Apple. So you want to deal with the invitation first, since it literally just dropped in our inboxes about 30 seconds ago?
Yeah, I think it's been about a minute here, Scott. I literally just got this. September 9th is the date. That's when we're expecting Apple to host this event. That's what the invitation says here. It's going to be in Cupertino. Same drill as always, right at that Steve Jobs Theater. As far as what we're expecting on the announcement front, the big star of the show is this reported super thin version of the next iPhone model. People have been calling it the iPhone Air, kind of like the MacBook Air. And that's supposed to kind of kick off this new era of redesigns for the iPhone. As far as artificial intelligence stuff, you and I, Scott, were over there at WWDC back in June. They kind of got all the AI things out of the way, but we should be on alert at that event 2 weeks from today if there's any kind of unique AI things going on there. So that's what you see the invite right there. Awe dropping is what they're calling it. So we'll be there in 2 weeks' time. As far as the Perplexity stuff, you're right. Yeah. That has been reported before that Apple was kind of eyeing it. We heard Apple Services boss Eddie Q even talk about partnering with Perplexity. But since then, and we have not seen any real action going on the M&A front. Just a few weeks ago, I was with Tim Cook down in Cupertino on the earnings report. I talked to him about M&A and how they're thinking about that in relation to AI. The answer that he gave me was actually very similar to the same answer he's given basically through his entire tenure as CEO about how they view acquisitions, which is if it makes sense, we'll do it. But for the most part, we've just seen in action, they've been largely allergic to that. And this story from The Information really just doubles down on that. There's been a push within Apple to perhaps think about making a bigger acquisition in AI in order to catch up, but that's been met with a lot more resistance internally. So while Apple has been talking about doing M&A, it really seems like they're going to try to build this thing themselves, potentially partnering with OpenAI. Last week we learned potentially partnering with Google or partnering with Anthropic, Scott.
So part of this reporting, as I mentioned, also is about Mistral.
Exactly.
The smaller French-based firm. I fully understand that, not only has this been sort of reported by some others and talked about by you, me, and many others on our very desk, including, some of our guests who've come on. The street has bandied about this Perplexity idea. Do we take in any way the continued reporting that what was a little bit of smoke seems to be gathering into a potential fire?
Not really, because these reports are also saying these discussions are internal. And so, yes, of course, Apple's going to kick the tires around anything that could make sense, that could fit in. Mistral is an interesting one because it's an open source model that would be a way for them to kind of buy a model themselves and bring that in and then build on top of that. But it just doesn't sound like that's the direction they're going, because at the same time, Scott, we're getting these reports that they want to license a large language model from one of the leaders, whether that's ChatGPT or OpenAI, whether that's Anthropic, whether that's Google, and figure out a good one that they can build on top of there. So instead of buying Perplexity, which does build on top of those models, why not just license it just like Perplexity does? Instead of buying Perplexity, just pull a Perplexity, so to speak, and do it yourself. So it seems to be that's the direction they're moving. Tim Cook also, Scott, hinted a little bit at that on the earnings call a few weeks ago, saying he was asked, do you think these models have become commoditized? He didn't say yes in so many words, but he did say, if I talked more about that, it's going to kind of give away our strategy. I read into that they really are looking to partner rather than build or acquire.
Yeah.
Steve, thanks for the insight. We've been following. I mean, the stock has obviously had a nice move. It's up 9% month to date. So there's been, we've talked about the détente between Tim Cook, CEO of Apple, of course, and the president. If that's in fact what was needed, it's only been beneficial to the shares. If you take a look at the month to date move there, Malcolm, that's Steve Kovac, of course. Malcolm, you own the stock.
Yep.
We've had this conversation before.
Yep.
About Perplexity. You want this to happen?
I want this to happen, but I'm not as excited as some others are probably feeling right now listening to that headline. I think that my unpopular opinion, the reporting that we got last month that JP Morgan, Chase, and Apple are a lot closer now than they were before to solidifying a partnership to replace Goldman in their credit card business is more additive to Apple's earnings over the next 12 months than acquiring Perplexity if they were to get that deal done today. It's going to take 12, 24, 36 months for Apple's designers and Perplexity's engineers to get on the same page and decide what it actually means when they incorporate their search engine into Apple's products. We just saw the botched rollout with ChatGPT 5. We saw OpenAI have to walk that back and bring previous versions back into existence because it just didn't work right. Some people wanted to think deeply, other people want a quick answer. So this is not going to be an open and shut thing where suddenly Apple just takes the lead and leapfrogs everybody else. It'll be great when it finally gets there, but it's going to take some time.
Josh, Dan Ives has said, I mentioned the Wall Street commentary around this idea. The clock has struck midnight on Apple's AI strategy. Perplexity is the answer. Bank of America in the past. In our opinion, any such deal would likely be positive for shares. UBS paints this as a defensive move in nature and not a positive catalyst. That seems to be a bit of an outlier perspective. Yes, they may have missed the AI boat, so to speak, but if you jump back into it in such a big way, I'm wondering what you think this could mean for the stock that you own.
I think if they do it, you get a new all-time high in Apple the day they announce it. I think this is what everyone who is holding shares of Apple and believes that this will remain a relevant company for the next 10 years into the AI generation wants them to do. And not only that, they want the founder of Perplexity under the wing of Tim Cook. Could even be like a potential successor after a number of years running the AI business. If we truly believe that AI is going to be the most important technological revolution since electricity, which is effectively, I think, the house view of Silicon Valley, then you want one of the earliest and most talented entrepreneurs in the space. The other alternative, Judge, is to piecemeal jump into people's DMs like Mark Zuckerberg and do one-off, let's buy small stakes or big stakes in all these different startups. Let's recruit people away from other companies. This is a case where buying it makes more sense than building it and might actually even end up being cheaper in the long run. Perplexity is right now said to be looking to raise around in the $20 billion valuation area. I want to point out that Apple has $130 some odd billion in cash on their balance sheet. And yes, I understand they also have debt. A lot of that is just strategic, the way they're managing their money. I'm sure they're earning something on all that cash. That's fine. The street's not giving them credit for that. The street doesn't care about that. We already know this company is capable of generating oceans and oceans of dollars. The last thing I would say is I'm okay with a partnership, too, as a long-term Apple shareholder. Having Google pay them $50 billion to be the default browser on iOS devices was a masterstroke. And I think up until recently, it worked out well for both companies. There is a world where Apple finds a really great partnership. The problem is the people they have partnered with so far, OpenAI, are already in deep with Microsoft. So I like Apple doing something like this. I don't predict that they will. They tend not to do deals, as Kovac just pointed out. But I think the stock makes an all-time high if they do it.
The world's changed, right? What they didn't traditionally do, they may be forced to do. It's a good segue for us to NVIDIA earnings, Brian, which are tomorrow. That stock's on pace for its fifth straight positive month. The FT, I think, paints this pretty well today. NVIDIA earnings set to test Wall Street's faith in the AI boom. at a time when I think it's fair to suggest that there's a fair amount of AI anxiety happening in the markets right now. Not only if you look at the stock performances month to date of many of these names, you take Apple out of the mix. I don't think that people would consider them in the same way they do the other hyperscalers of the Metas, which shares are down, Microsoft's down, Amazon's down. We can show you a wall we made to show you what we're talking about with the anxiety around AI. Sam Altman, OpenAI, investors, quote, overexcited by AI, he recently said. MIT, 95% of Gen AI pilots failing. Meta reorganizes their AI unit again and also freezes its AI hiring. So that's the backdrop that we paint for you as we head into this critical earnings report.
Yeah, I think that's right, especially if you see how these big companies in the Magnificent Seven have been trading August versus July. It makes sense to me that Apple has been outperforming, especially considering market cap and size. NVIDIA is at the top of the mountain in terms of its product, where the earnings are going, and where the growth is going. I think the bigger discussion is what's underneath NVIDIA than other two semiconductor sizes. I think the Meta news in terms of what they're doing with AI and the Sam Altman news with respect to a bubble. I think in our view, we've always said that to have a bubble in a particular asset, Scott, you need to have financials involved in terms of lots of IPOs, lots of secondaries, lots of M&A activity, and we haven't seen that quite yet. But what we're hearing today and more about Apple, in our view, we would much rather see a partnership versus them buying an asset. The stock's going to go up regardless. But again, the more we start to see more gobbling up, quote unquote, of these AI properties, I think the more we're going to have that.
Do you think we add to the anxiety? Do we have the risk of adding to the anxiety with these earnings from NVIDIA tomorrow, or do we, subdue them for a bit if this report turns out to be what many think it will be?
I think we subdue it because, again, NVIDIA's at the top of the mountain. I think the earnings are going to be good. The cash flow is going to be amazing. And I think more importantly, I think Jensen's going to talk about guidance and what's going to happen into 2026, especially considering everything that's happening with chips and the like. And I think this is going to be a major calming event with respect to AI overall.
Jenny, how do you see all this? The idea, there's obviously a lot of exuberance.
Yeah.
That's not a dirty word. If you want to put irrational in front of it, you have a different level of conversation, of course. But what do you make of it as we head into this critical earnings report tomorrow?
Yeah, so I think there is a lot of over-enthusiasm. And when we're talking about Apple and then leading into NVIDIA, we're kind of talking too narrowly. Because I think Apple and Perplexity, that's one thing, but we need to expand that conversation, because what does Perplexity do? I actually looked it up on Grok so I could give a good answer, but they aim to be a faster, more reliable alternative to traditional search engines. So we should be talking about that as a major competitive threat to Grok, ChatGPT, Gemini, Claude. And, it almost throws back to the 90s when we had Netscape and AOL, right? And Google was just coming up.
Totally.
There's a lot out there. And it's going to start to get diluted. And then we lead into Sam's comments about there being too much hype. I don't think it's possible to have too much hype with respect to AI as a business, as a tool. I'm super excited about it. And I get excited about nothing.
But it's a question of, you as a person or you as the investor.
Totally.
I thought, and I don't know if we have the capability, excuse me one second, to do this in the control room, but yesterday on Closing Bell, I thought Dan Greenhouse brought a really interesting chart to us. And if we can get it, let's pull it up. It basically shows the path of the NASDAQ during the IPO of Netscape versus the path of the NASDAQ after the release of ChatGPT. And they are eerily similar chart patterns around these two major events. Not to make the leap and say, well, what was one bubble automatically means there's another, but through moments of intense hype about a new and burgeoning technology, I thought that it was interesting. Are we getting it? There, guys, awesome.
Yeah.
Thank you for doing that. So that's what I'm talking about, right? He just sort of picked these two releases, but they're seminal moments, obviously, in the conversation about the internet and then the conversation about the proliferation of this AI technology and this transformational thing that we are all trying to get our arms around, both as human beings and investors.
Right, and that's exactly where I was going to, which is, so you can be as excited as you want from a technology, life-altering perspective. From an investment perspective, there are definitely pockets where valuations make no sense. Collectively, the market's kind of okay, right? Trading at, what are we at, 23 times? That's okay, but then there's pockets where you have things like 150 times earnings, 200 times earnings. NVIDIA might be okay. I do not remember what it's at, 30-ish times right now. That seems fair for the growth it has ahead.
It's probably cheaper, actually, on a historical basis than it's been relative to what its earnings.
What stock is 200 times earnings?
I think Palantir is trading at about 200 times. I think Palantir.
So how many of those are? How many of those
I don't know,
are there?
Josh, you're Investopedia Brown. You tell me. There's a bunch.
I don't think a lot. So
okay,
I would
but
say
you know what my point
there's
is.
a lot of excitement. Yeah, no, it's a good.
Okay, there's some that have
it's
negative
a good
earnings.
point.
Yeah, but here's
it's a good point, but it's a point that people have been making since 2023, and I would just say I don't think that's representative, and I don't think you think this of the overall market. The average stock does not look like the Palantir valuation,
Which
and
is
I
exactly
can't
why I said
really even think of
pockets
like
in there,
more than a
Josh.
few.
right, but there's more. There are a few.
Hey guys,
you see
rather than
areas-
talk over each other, I'm going to just go down to the cabinet meeting. We said that the 7th cabinet meeting is underway at the White House. We'll listen in to the president.
They're going, a lot of them are going up now. I don't know that big. Actually, Mark is building 4 of them, and others are building similar places. And when these things open up, I'll tell you what, our country, we're leading China now in AI, substantially leading China. And the reason is because we're letting them build their own electrical facilities. We would need double the energy that if you take all of the electricity that we produce right now in this country, you'd have to multiply it times 2 or maybe 3 times. So 3 times more than we have right now for everything, to operate your toaster and everything else, okay? 3 times more. And the way we're able to succeed, because China goes out and builds these massive plants. They're right now building 58 coal, in this case, almost all coal-fired plants. And coal is back with this country too, by the way. You know, there's a reason they use it, because it's good. It works for them. And we call it clean coal. We don't call it coal. We call it clean, even very clean coal. But we have coal going up. We have nuclear going up. Nuclear is very much in vogue now. It's safe and inexpensive and great. We don't allow windmills. We're not allowing any windmills to go up. I mean, unless there's a legal situation where somebody committed to it a long time ago, we don't allow windmills. And we don't want the solar panels that I was speaking with the secretary about, because they take up, you know, thousands of acres of our farmland. You see these big, ugly patches of black plastic that comes from China. And the solar is, you know, I like solar in some ways, but for firing up your big plants, it doesn't work. It's very unstable, but it really takes up your farm. The farmers are saying, you know, they're building these massive blotches in the middle of the fields all over the country. It's so crazy. It's so crazy. So we're not heavy into that at all. And windmills, we're just not going to allow them. They're ruining our country. They're ruining everyone. If you look at, I hate to mention countries, but you look at the UK, what's happened at UK, they have energy costs have gone through the roof. It's because of wind. They want to do everything. Close up.
We'll continue to monitor the cabinet meeting down there at the White House, bring you anything. Certainly, we're looking to hear commentary about the president's move to fire Fed Governor Lisa Cook. And if he does begin his remarks on that topic, we'll go back there. There also, of course, was a story about the government's stake in Intel, and the Commerce Secretary on this very network earlier today with Howard Lutnick suggesting that the president and the Pentagon are, quote, thinking about taking equity stakes in defense contractors. So we'll monitor all of that as it relates to the markets and the investments that you may or may not have. Let's get back to part of this conversation as we assess really what NVIDIA is going to mean, Malcolm, to this market. The stocks had a huge run into the print. Does that raise the bar to a degree or not?
I don't think so. So historically, NVIDIA shares don't do a ton the week their earnings come out, right? On average, the last 4 earnings from them, we saw something like a 3% move. But I do think it's interesting that the options market is now expecting about a 6.5% move after this particular earnings print by the end of the week. So that could be an all-time high above 191 on NVIDIA shares if that actually comes to fruition. But then obviously that cuts the other way. If the earnings disappoint, we're now talking about a slide. And so I think that it's important. It probably is going to reaffirm what we already knew about the AI trade, just based on the fact that Amazon, Microsoft, and Alphabet all reported that they're going to continue their capex through the remainder of this year that they committed to back in January. So that has to bode well for NVIDIA since they control 80% of the global AI chip market.
I'll tell you what, the other big one, I know NVIDIA sucks the oxygen out of the room, but CrowdStrike, Josh, is tomorrow after the bell. I think at the given moment, I'm not suggesting it's more important, less important, whatever it is, but given the conversation around software versus semis and whether AI is, quote, killing software, and there's a fair amount of commentary that we've had about that topic, CrowdStrike seems important to me.
I think you're right, Scott, and I think you're asking the right question. Is that gloom hanging over some of the SaaS names going to carry through into cybersecurity? My answer to that is no. And actually, I think AI makes cybersecurity even more vital than it already is. I think it's the one line item on most technology budgets amongst governments and Fortune 500s that literally can't be tampered with and probably has to go higher over time. So I don't think that CrowdStrike will face the same issue as, let's say, a human resources SaaS company or something like that. Let's just talk about the expectations quickly. 1.1 billion in revenue for the quarter. That would be 19% year-over-year growth. Earnings per share of 83 cents. The big number that everyone wants is subscription gross margin. I mean, that's gone over the last 6 years from 55% to 80%, and that's why these companies have the valuations that they've had since they've come public. As long as they can continue to chug along with 20%-ish growth year over year, I think the stock is fine. I want to remain long here. It's well off the highs, as you can see in this chart, but I think this is the best company in its industry in the whole world, and I'm going to stay long regardless.
There are others that are important too, Brian. Okta, Target gets raised ahead of its earnings. It's a buy at Canaccord. It's set to report too.
Yeah, we love this name. We've owned it for a while in our SMID portfolio. This stock's kind of tripped a little bit on the last couple of quarters, but for revenue growth and the addressable market in terms of where they're going, I think this is a great name to be in that hasn't had this big run like CrowdStrike. Clearly, CrowdStrike's corrected here a little bit. I mean, I want to start taking a look at that again, but Okta has been one of these names that have been kind of muddling here a little bit. We really like it.
Anybody thinking about Salesforce?
Yeah, I am.
You are?
Yeah.
Because that seems to me to be the one with the biggest question mark around it. If you look at that performance of the stock versus some of the others, for example, that chart pretty much tells you a story. Year to date, down 27%. The target today, a stock that's 244, gets cut to 325 from 350 at B of A. They still say you should buy it, but their enthusiasm is tempered a bit. What catches your eye about this one?
So
the underperformance alone?
No, I'm not thinking of it in a positive light. I'm just thinking about it. And I'm thinking about it from the broader perspective and the statement that it makes on software. So one of the biggest thoughts about threats from AI to software is that there will be fewer corporate employees, which mean fewer licenses. And when you think about a Palo Alto or a CrowdStrike, there is exactly how Josh said, no end in sight for the demand that's needed. It's not based on how many employees you have. But if I think about a firm like Gilman Hill, if I was operating 10 or 15 years ago, I would need 20 or 30 people to do what 10 people can do today. And that means we don't use Salesforce, but if we did, I would need 10 licenses today. And probably my growth over the next several years will be a much smaller headcount escalation than it would have been even 3 years ago before AI started taking over so much. So I think about stocks like that and think, actually, I don't want to touch it. I think there's a lot of risk when it's a subscription-based software company.
Okay.
So the down 26% is justified. I think it's a hot potato.
All right, let's squeeze a break in. We come back, we've got a bunch of calls to go over with ownership on the desk. I got one on Netflix in front of me as well as Uber. And the price target jumping even further. We'll tell you the number. And later, Josh Brown, best stocks in the market list. We'll discuss that too. Welcome back. Let's talk about some of these moves. Netflix today reiterated outperformed. Bernstein making that call today. The elephant in the room is getting bigger. While Netflix remains the undisputed leader in long-form content, YouTube increased its share of streaming by 2%, while Netflix's total U.S. engagement share declined by 1%. We expect Netflix to continue to diversify its content to widen its reach. Josh Brown on Netflix.
I'm going to give you my prediction here. By the end of the year, I think Netflix is going to roll out something either user-generated or something where YouTube creators are being incentivized to move over to the Netflix platform. And they have to do it because YouTube is now full-on competing for the battle of the living room. I don't even think most people realize this. YouTube viewership on a television set, not a phone, not a computer, is 16% of all YouTube views, but accounts for 42% of total watch time, which means the next generation is utilizing YouTube in the same way that they use Disney Plus or Netflix, and Netflix has to respond. So there are a lot of amazing creators on YouTube. Netflix historically has not done podcasts. They've not gone after these people. I think that's going to change, and I think Wall Street is going to like it when it happens.
All right, Jenny, Uber. Target goes to 110 from 105. Buy at Loop Capital. Long run of strong execution has become expected by investors, this firm says, and valuation has been rising throughout the year. While lack of controversy is perhaps somewhat boring as far as a secular growth story can often be, the stock has been especially rewarding to investors. It is up 58% year to date. S&P, as we know, is only up 10. We hope Uber remains a boring stock from here, they say. What about you?
So we do too.
Tongue in cheek.
We've actually joked for years at Gilman Hill that there's nothing we love more than boring stocks. And our worry is that actually Uber doesn't stay boring and that Waymo becomes way more competitive and that the landscape really does start to change. So where you stand today is stock's up 60% year to date, trading at 28 times, but it still has a 5% free cash flow yield. So it still makes sense for our disciplined growth strategy. Earnings, by the way, are expected to grow in the high 20% for the next range for the next couple years, but we have a 4.25% position in our growth portfolio. That's a little bit rich for us, so we'll probably end up trimming some.
Brian, Lilly's a nice winner today. Let's show those shares, please. Their weight loss pill cleared a latest trial. And last I saw it was up 4 or 5%. Is that where we are? Yeah, there we go. That is Lilly. You own it.
Yeah, Lilly's one of the only pharma stocks we own these days, basically because of the product line, and they've done a really great job in terms of managing that. I think there's still some risk in big pharma overall, but we really like what Lilly's been able to do. And I think, too, that the longer we kind of go through with respect to worrying about tech, Scott, I think healthcare is going to become more of a contrarian call.
Let's kick up AT&T also. They're going to buy some Spectrum licenses from EchoStar, $23 billion. John Stankey was on Squawk, said the deal is, quote, a win all the way around. It was added this week to Citi's Positive Catalyst Watch. Brian Belsky, you own AT&T. Give me something quick. And then Jenny's got some derivative moves off of this today, too.
Part of our barbell, Google and Netflix, but and AT&T on the other side of the communication services, they've gone back to their broadband business, going back to their core business, and that's really, really positive longer term.
Yeah.
Jenny, you were flagging something for me.
So it's interesting because the tower stocks, Crown Castle, AMT, and SBA are all down 2 to 3% on this news. And my initial was to think that this would be good for them, right? AT&T just acquired $23 billion worth of new Spectrum licenses, and you would think that the leases would increase. But realistically, it's bad for the tower stocks because AMT gets 4% of their revenues from EchoStar, Crown Castle 5, SBA 3. So they're probably not going to renew those leases. It ends up being a 50 to 100 basis point headwind on revenues for those companies. They'll dig out. But it's got these knock-on effects that aren't necessarily positive for the towers.
Give me something real quick, Brian, on Oklo, which was a new buy for you within the last few weeks. I think it's initiated today with a buy, $92 to target at B of A, powering the AI era with next-gen nuclear. I mean, I heard the president in the cabinet meeting just now talking about this very issue.
Yeah, I love the theme of this company because we bought it a couple of months ago, and obviously with the nuclear tailwind, but 2 years out from now, they're going to have these separate nuclear basic platforms that companies can buy that will basically power a company. So this technology is amazing, and I think it's going to make it easier and easier to use nuclear power.
All right. Silvana now has the headlines for us. Hi, Silvana.
Hey, Scott, good afternoon. The CDC cut a monitoring program for foodborne illnesses in the beginning of July. The agency telling NBC News the federal and state partnership reduced its surveillance for just 2 pathogens, Salmonella and E. coli, instead of the usual 8, which include those that could be fatal. Food experts say the move could make it harder for public health officials to track and respond to outbreaks. Australia has expelled Iran's ambassador over the Iranian government's involvement in 2 anti-Semitic arson attacks in the past year. Australia's prime minister said today the country's security agency found enough credible intelligence that Iran planned the attacks following an investigation into dozens of anti-Semitic incidents across the country. Iran's foreign ministry said that it was weighing its response. And a slow-moving dust storm called a Haboob grounded flights and left thousands of Arizona residents without power Monday. PowerOutage.us reported more than 40,000 customers lost power, while the heavy winds and rains that followed the storm also caused delays at Phoenix Sky Harbor International Airport, Scott. Wow.
All right, Silvana, thank you very much for that. Silvana Henao. Coming up next, Table Talk. We'll debate what's been eating the restaurant stocks lately. Morgan Stanley's talking about them, and we will next.
BC.
We are back. We said Morgan Stanley's talking about restaurant stocks today, a little table talk, if you will. That's what they call it. McDonald's is on their list. They like it. They like the extra value meals. Ryan Belsky, you have it. They prefer Wingstop, Chipotle, and McDonald's. Near-term risk-reward improving for Domino's and Brinker. I think we saw what happened with Brinker.
Yeah.
Was it last week? Right?
Yep.
Chili's just killed it, and there's been, I think, some unevenness in the restaurant space. McDonald's is yours. What do you think?
There's some really tough stocks they're tough companies to buy, just like some of the smaller mid-cap retailers. And if you're looking at consumer discretionary, McDonald's has just been a steady Eddie this year. We were talking off camera that
I think I confused Brinker and Darden, by the way, but that's me.
That's all right. McDonald's is the comfort food. Shake Shack's the momentum, the exciting one right now. But we've owned McDonald's for a long time in our value portfolio, and it's been a great performer.
And it's delicious.
And it's delicious.
Delicious.
So you own Starbucks.
Yep.
That's great. They say that Starbucks, quote, faces a moment of truth. The time for top-line improvement is at hand, or else the stock could face hurdles. You agree?
I do agree. I think we're through 3 or 4 innings in the 4th inning into this operational turnaround. We need a few more innings to see if they can actually put this together. It's on our official watch side of things, but they need to get this operationally right. I think they do. They can, especially as they kind of cut down capacity in terms of their product line.
Chili's is Brinker, by the way. I've confused myself twice now. Just for the record, I'm keeping score on myself.
But you're making a good point, actually.
I've probably confused everybody else, too.
Yeah, but
sorry.
It's the bigger point, which is there's so many of them, and they're all interchangeable. Like, where do you get the competitive advantage?
They are.
Shake Shack, perhaps should garner more attention post-results. On Shack, Josh, they say, quote, burger segment competition and beef inflation give us some pause. How about that?
Yeah, it's always going to be something. So I've held the stock through the pandemic when 100% of their restaurants were physically closed. So I'm not going to worry so much about that. I think with Shack, you basically have an expansionary story where you've got 500 units that could go to 1,000 and then maybe 2,000. And that is probably why there is a premium valuation here. I wouldn't say it's cheap, but they're expecting 50% earnings growth this year. So, like, the premium is warranted. Most of these other companies we're talking about would be happy with 3% growth. But my favorite pick in the space is Toast. It's a $42 stock. I think within a few years could be 65 or 70. And Toast is not a bet on one particular restaurant or another. It's a bet that these are no longer discretionary businesses. It's actually more expensive to go to the supermarket in some parts of the country and fill a basket than it is to eat out 3-4 times a week. And so Toast is going to power the payment function. And not only that, in an inflationary environment where everyone needs to be more efficient, Toast is the company that comes in and enables restaurant owners and chains to get way more efficient as they move into the digital era. And, it's the biggest player in the space at this point, standalone, and I think it goes higher. So I like Toast near term better than Shack. 36 PE, in my opinion, warranted.
All right. We still have Josh Brown's best stocks in the market to get to on CNBC Pro, and Mike Santoli. He's next with his midday work.
TrumpDeals.com.
We are back. Senior markets commentator Mike Santoli is here at the desk. I mean, trying to fire, Fed governor doesn't really do much to the market. I guess it's going to be NVIDIA. Like, we're going to just wait and see what happens, and then the market's going to figure out which way it wants to go.
I mean, around the edges, you can see the market is not finding a lot of reason to rethink the conclusions of Friday, right? So post-Powell, the idea that you're likely to get lower rates into an economy that's hanging in there. Durable goods looked okay today. So it's still, I think the general framework works. One reason, I mean, look, the market's not going to look 4 steps down the line and say, what are the implications of this potential firing? And because we already are on a dovish bias in the current committee. So it's not as if this is going to be a 180-degree swing if somehow it's the deck is stacked in that direction. You do have a little more Treasury yield curve steepening. So I think it's, again, just marginal moves and this rotational grind that is the default mode of this market between catalysts. And so, yes, NVIDIA, the next thing to at least either dictate some direction or just clear out of the way and have the market be able to do what it was otherwise going to do. So when you have a 6% implied move for NVIDIA on the number, that means almost a 0.5% potential move from that alone in the S&P 500. That's why I think you have people waiting and holding in reserve whatever they were otherwise going to do.
You have a quick thought on the peel back in Bitcoin?
Yeah, I think I definitely have that on the monitor this.
Yeah, I figured
because it
might.
often does have a lead, role in terms of what stocks do. So some of the stuff has come off the boil. You have the crypto-related stocks. Palantir is obviously well off the highs. So I don't know if that's just a little bit of a stutter step in the kind of retail, kind of risk-seeking trade, but it's worth being mindful of it.
All right, good stuff. I'll see you in a couple hours on Closing Bell. That's Mike Santoli. Coming up next, Josh Brown. He calls this one of the, quote, best long-term charts he's ever seen. We'll show you what it is next.
of AG1.
Josh Brown's best stocks in the market list wants to talk about three. No new additions today, but you have flagged three, I would assume, for a specific reason.
Yeah, so we took a look at the cheapest stocks that are on the best stocks in the market list because over the last, let's call it 2 weeks, but really accelerating since Friday, there's been this rotation into value. We do tend to talk about higher price stocks just because those tend to be the better companies because the market's not stupid. But in this case, we'll talk about some cheap ones. The first one is O'Reilly. As you mentioned in the tease, this is one of the best long-term charts I think I've ever seen. It's basically very basic. It's auto parts, so it's not AI, but it's substantially cheaper than it ought to be, given how well they've executed. And what's happening here is it's a cannibal company. It's eating itself. They have bought back about $26 billion worth of stock since 2011. They continue to shrink the float while growing earnings, and you could see the success for yourself. These are the types of stocks that really started to move on the heels of Jackson Hole in a way that they haven't in a long time, Scott. They've been left out of this market. I like this name, and as a long-term risk management tool, I would be using a 50-week moving average. Right now, it's about 86. If it violates and stays below, it tells you that something has changed with the way the buyers feel about this name. I'll do the other three much more quickly. Synchrony Financial is SYF. This is credit cards, ultra low PE, 8.5 times earnings. The bears would say with good reason. I like a low volume pullback in this name to about 70. I'd pull the trigger right there, but it has already broken out. I want to retest. HIG is the Hartford Insurance Group. Same story, value stock, 11.5 times earnings. I think you want to own it above the 130 level. That's where it's really looking for a new range higher. And lastly is Allstate. When was the last time we talked about this name on the show? 9.6 times earnings. Repeated failure. Give me a one-year chart. Repeated failure to get above 215. If it can take that level out convincingly on good volume, I don't know if there's anyone else left to sell. So I would wait for that breakout, but I think it's very likely.
All right, good stuff. I appreciate all that. We'll take a break. We'll come back.
Thanks, Judge.
What's next? setup for you while we have you. We wanted to hit you on Ulta Beauty. It reports later this week. You own the stock. You have high expectations.
We do.
The stock is up 40+% in 6 months.
Yeah, Ulta had a really tough year in 2024, Scott, based on really tough comparisons in 23, but they've really kind of turned it around. Excuse me. Here's a stock that's 20 times earnings. And we talked earlier about the consumer discretionary sector, trying to find companies in there that actually are operating quite well with steady earnings. And this company, $23 billion market cap, again, 20 times earnings, continues to do very well. And I think the guidance is going to be really strong. And it's in one of those sweet spots in consumer discretionary. I think it's going to continue to grow.
Okay, we shall see. A quickie, and then finals are next.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
I hope you join me. Closing bell, 3 o'clock Eastern today. Tom Lee will be with us, and Cantro will be with us as well. That's Alex Kantrowitz, and we'll hear from Kovac too. We'll try and advance the ball a little further on that Apple story we talked about at the very top of our program today. It was an interesting one for sure. Josh Brown, your final trade is what?
Remain long toast, bullish into the end of the year.
Who's got KeyCorp?
I do. KeyCorp, KEY.
Why that one?
Mid-cap regional bank, 4% dividend yield. Think it's going to play on deregulation.
Okay, nice move today. Who's got the cybersecurity ETF?
That's me. There's still a wave of consolidation coming within the cyberspace. The deal between Palo Alto and CyberArk won't be the last.
Okay, as we talked about CrowdStrike a little bit earlier, those earnings are looming large too. that was the point of that conversation. Marriott, must be Jenny.
That's me. Stocks down 4% year to date because of fears about U.S. travel. Numbers are coming in better than expected. 4% free cash flow yield, 24 times earnings, 13% earnings growth ahead.
All right. I'll see you on the bell.
Thanks, Scott. Welcome to The Exchange. I'm Courtney Reagan in for Kelly Evans. Here is what's ahead. President Trump says he is firing Fed Governor Lisa Cook effective immediately, claiming she committed mortgage fraud. Cook refusing to resign, saying Trump has, quote, no authority to do so and planning to sue over that attempt. The market's taking the news in stride. All three major averages are higher. The 10-year yield also holding steady around 4.26%. Let's get right into how the president's latest attacks on a Fed official could play out both in the Beltway and on Wall Street. Steve Leisman is looking at whether Trump has the legal authority to fire Cook and what that means for the future of Fed independence, while Eamon Javers has an interview with a different government official looking at her own battle with President Trump attempting to fire her back in March. FTC Commissioner Rebecca Kelly Slaughter. Steve, let's kick it off with you.
Thank you, Courtney. The attorney for embattled Fed Governor Lisa Cook issuing a fiery statement late this morning saying Cook would file a lawsuit to challenge her firing by the president. Cook attorney Abby Lowell saying, quote, President Trump has no authority to remove Federal Reserve Governor Lisa Cook. His attempt to fire her based solely on a referral letter lacks any factual or legal basis. We will be filing a lawsuit challenging this illegal action. Importantly, this appears to be the first time that Cook has challenged the, quote, factual basis of mortgage fraud that is at the root of the president's firing. She previously hadn't said anything about it. The president said he fired Cook for, quote, allegedly making false statements on one or more mortgage agreements. Some of the questions surrounding it's unclear if Governor Cook was at work at the Fed today. We're not getting any comment from them or about whether Fed Chair Powell would do anything to enforce the president's firing decision. It's also unclear how or if the president himself will enforce his own decision here. FHFA has not responded to my questions about whether they had previously questioned Cook. And Commerce Secretary Howard Lutnick acknowledged on CNBC today that there are only allegations as of now. No charges have been filed. There's been no ruling on the facts, raising questions about the extent to which this is all politically motivated to give the president control of the Fed and interest rates. If the president replaces Cook, he will have a majority of the members of the Federal Reserve Board of Governors, and that could lead, in fact, Courtney, to failure to seat or maybe even fire the district presidents.
There are so many questions here, and I love that you brought up that these are allegations. So far, no charges have been filed, but we understand there's some investigation into that. How does that play into the timing of a lawsuit and whether she steps down or not, if she goes to work, if she's fired? I mean, what's she doing right now, or what should she
we
do?
don't know. As for the timing, it doesn't seem to concern the president that these are only allegations. There's been no finding of fact. Justice Department has said they're investigating the matter. I've sent FHFA a series of questions. Yes, Mr. Pulte, I've sent you the questions as to whether or not, one, how they found these allegations, were other Federal Reserve officials looked at as part of this. Is it common to reveal the names of people who are referred for criminal prosecution to the Justice Department? We don't know if that's normal. Usually, when we ask about things like this, they say we can't tell you the names because it's under investigation. Well, not in this case. Now, it may well be that some form of fraud was committed here. I talked to Scott Alvarez, the former general counsel of the Federal Reserve today, and what he told me was you cannot have cause if the allegation is untrue, or even you can't have cause from an allegation. It has to be a fact.
There's so much going on here, Steve. Thank you so much for bringing us up to date. We do want you to stick around because we're going to get over to Eamon Javers, who joins us with FTC Commissioner Rebecca Slaughter. President Trump tried to fire her back in March. Eamon, take it away.
Courtney, that's right. And Commissioner Slaughter, thank you for being here. I want to start with this. You are the only other official in Washington that the president is trying to fire right now. You've been fighting that since earlier this year, so you know more than anybody how Lisa Cook might be feeling today and what her legal options might be. But let's bring everybody up to speed on your case and just give us a sense of where things stand right now. Earlier this year, the president tried to fire you. That went to the courts. Tell us how that's been playing out.
Sure. So, in March of this year, the president tried to fire myself and my fellow Democratic Commissioner Alvaro Bedoya. We sued and challenged that firing. It went to a hearing in the district court. And in July, the district court issued a decision saying that the president was wrong and we were right. And in fact, that firing was illegal. So that decision came down in the evening on a Thursday night, 9 a.m. Friday morning, I was back in the building at the FTC. It was really, really great to be back. And then a couple days later, the appeals court stayed that lower court decision pending appeal. So now we are waiting for the appeals case to work its way through the courts.
So what happened to you on day one? I mean, this is sort of analogous, not exactly the same as what's happening over at the Fed today, but there are big questions right now about whether Lisa Cook is at work today, whether her devices work, whether she has access to email, whether she can get into the building at the Fed. Give us what your experience was earlier this year.
Well, my experience was that almost immediately my devices stopped working. I was told that my access to the building would be cut off. I was actually at our local elementary school when I found out I was fired, so I wasn't in the building when it happened. But I did not try to go back to the building the next day because it was very clear that the chairman of the FTC was going to enthusiastically comply with the president's attempt to fire us. And so I wouldn't be let in the building, and I didn't want to put the career staff who work there in the position of trying to navigate that. So we turned to the courts pretty quickly.
And I think that's the key distinction between your case and the Cook case that we're watching play out today, right? Is that you worked for an FTC that was controlled by the Trump administration, and the person who's running the FTC enthusiastically supported the president's decision to try to fire you earlier this year. At the Fed, it's a different kettle of fish because we've got Jay Powell running the Fed. He has insisted that the Fed is independent. He's insisted that the president doesn't have any authority to fire him. And so it's now unclear what plays out going forward. Does Powell allow Cook into the building? Does he allow her access to her systems? If he does that put him more in the crosshairs of the president than he already was, if that's even possible? As you watch all that play out, what do you make of it?
Yeah, I think those are really good questions. I think it's important to note, though, that the FTC chairman in place right now is the first FTC chairman not to defend the independence of the FTC. And I was the first FTC commissioner to be fired since 1933 when FDR tried to fire a commissioner and then a unanimous Supreme Court said that it was illegal. So that decision to cede the independence was one that the FTC chairman made, not one that exists in the law. But you're right that it's interesting to see what will happen. I think an important thing to note is that the president's attempt to claim cause, as we just heard, basically allegations that he says amount to cause to fire Governor Cook, it means that if a president can fire someone for a manufactured cause, they can fire someone for no cause at all, even if there are removal protections in law, in the statute. And in that sense, Lisa Cook is in a very similar position to the one that I am in.
Okay, but the president argues, look, certainly the federal government and he, in his view, the Fed should be doing what he says they should be doing. Why shouldn't a democratically elected president of the United States who won a resounding victory in November of last year, why shouldn't he be able to fire people from these government jobs and put in people he wants?
Because the laws of the United States say that he can't for no reason at all or for manufactured cause. The laws that were passed by Congress, signed by a president, have been in place for a century, have some limited protections on the president's ability to control these independent agencies. And that is because Congress set it up to protect the markets and the people who depend on the markets to operate with integrity and stability and certainty. And I think that's the thing that we shouldn't lose sight of here. This isn't about Lisa Cook's job or my job. This is about the markets and the economy that people rely on to put food on the table. And what people are worried about right now is high prices. They are worried about their ability to support their families. And if there is a crash in the markets, they're going to be really, really worried if there isn't an independent if there aren't any really independent regulators out there who are going to be able to provide some guardrails and some protections. And that's what this is really about at the end of the day.
So last question for you. We've done sort of the legality of this, the politics of it, why it's important. What do you think Lisa Cook is feeling today, given your experience on the receiving end of one of these? How does that play emotionally?
Well, I don't know Lisa Cook personally, but I can tell you from my experience, I felt and continue to feel really, really worried for the institution that I served for 7 years and the people that it serves. That is what is really animating and incredibly distressing. I mean, continue to love my job at the FTC, and it is an incredible honor to get to serve, but it's most importantly a duty, a privilege to try to help make the economy more fair, more equitable, provide more opportunities for people, and the inability to do that work is incredibly frustrating.
Commissioner Slaughter, thanks so much for being here. Appreciate your time and analysis today. Courtney, I'll send it back over to you.
Thank you, Eamon, and thank you, Kelly Slaughter, for your candor in that interview. Really appreciate it. Steve Leisman is still with us, and also joining the conversation is PIMCO's head of public policy, Libby Cantrell. Steve, after we heard that, and we heard what Ms. Slaughter said, she has not been able to, or had not been able to effectively communicate with her devices cut off, not being able to enter the building. If that happens with Ms. Cook, she can't really participate in Fed work, Fed activities.
Right. And if she's not replaced, then we have 5 members of the Federal Reserve Board of Governors, 3 to 2. By the way, they've operated without a full complement of board in a while. But I want to get to what I think Ms. Slaughter brings up. There are two things that can be true at once. On the one hand, it may be true that Lisa Cook committed mortgage fraud. We don't know. There are allegations out there. We haven't heard her side of the story. That could be true. It could also be true that we are in the process of a broad and historic challenge to the existence of independent, apolitical agencies in this country that have been brought on by President Trump, where he is asserting executive authority over the Fed, over the FTC, over all manner of agencies. BLS, any one of these places where there have been carve-outs where we wanted to insulate those agencies from politics and from the presidential authority. And he comes to and he says, I am the executor. I am the executive branch. I have executive authority. In fact, the second paragraph of the president's letter today asserts his executive authority. And that is what we are in the middle of. It may well be true that the allegations are accurate against Lisa Cook. It is also true we are in the middle of an historic challenge to the absence of or the attempt to wall off certain agencies from political control.
Eamon, thanks so much for bringing us that interview with Ms. Slaughter. After you've spoken to her here and now we have some of that information, what questions do we still have about sort of what I was just talking about with Steve, her ability to actually do anything, to continue her work at the Fed while we wait on potentially this court challenge to make its way through?
Sure. I mean, before we even get to the court challenge, Courtney, we need to know what's going on over at the Federal Reserve today, right now. I was just standing on the sidewalk outside the building. We were texting and calling people inside the building, trying to get some sense of whether Lisa Cook is reported for work today. We don't know whether she's on the job or not on the job as we speak right now. The Fed should tell us what is the situation over there. And ultimately, my sense is that will be a decision for Jay Powell along with the rest of the Board of Governors. And maybe the board is split. Maybe Powell doesn't have the unilateral authority inside the Fed structure to make that decision. But someone needs to tell us whether Lisa Cook is on or off the Fed right now and what's going on inside the building. And then the second question is what happens over months to come, right? If this lawsuit is filed, as we heard from Abby Lowell, Lisa Cook's attorney today, that it's going to be that, I think the Slaughter example is illuminating here, because you can see how a district court can rule one way, the appeals court can rule another. We can go back and forth with getting access to the building in and out. So how does the Fed handle that process over months, where it could be you have one ruling coming in saying she's out, another ruling come in say, no, she's reinstated. What do you do with your temporary person, particularly if the president nominates and gets someone confirmed up on Capitol Hill? All of that still to be worked out right now, and that's going to play out over the coming months, could create real confusion around the Fed, who's in charge of the Fed and how many votes there are and how all those people are voting.
Absolutely. And of course, Steve brings up some sort of bigger picture ideas, Libby, which is where I want to turn to you. I mean, if you are a voting member of the Fed and you have to decide about interest rates, as you always do, what incredible pressure this must bring to sort of, if you decide we need to cut rates, to prove the point, right? Show your work that this was done because of data rather than done because of pressure.
Yeah, well, nice to be with you, Courtney. I think Chairman Powell has absolutely opened the door to a rate cut in mid-September. So in some ways, the timing of this is beneficial, that it comes after Jackson Hole, when he gave a little bit more of a dovish speech. Again, that opens the door to that rate cut. But just by and large, this is a very uncomfortable position for the Federal Reserve to be in. The Federal Reserve obviously prides itself on its independence, on being politically neutral and completely devoid of these politics. So for sure, this comes at a time also when, of course, the Fed is also trying to interpret different types of data, potentially upward pressure on inflation, but then also potentially headwinds to growth from tariffs and from immigration. So this just compounds what already is a difficult sort of position for the Federal Reserve to be in.
Even obviously there's a lot of discussion about Trump appointees and people that he wants to sort of cooperate with him and his desires. And FHFA Director Bill Pulte was indeed nominated by President Trump. To Steve's earlier point, he's reached out to Mr. Pulte trying to ask questions about how was this investigation started? Is this a normal course of affairs to investigate Fed governors? Any take on that from the folks that you're talking to about the pressure that sort of started from Mr. Pulte himself?
Yeah, Courtney, that's a good way of looking at it. And I'm sorry, go ahead.
No, go ahead, Eamon, and then we'll grab Libby as well.
Yeah, so I was just going to say that, Pulte is a Trump loyalist, right? He is very, very supportive of the president, and he's supported the president's efforts to investigate the Fed and its building, and whether or not the Fed is wasting money or being irresponsible by renovating its buildings, and that trip that the president famously took to the Fed. So Pulte is somebody who is going to be doing what President Trump wants to have done here. And I think that's a good question, which is, what was the predicate for this investigation? And does that give Abby Lowell, who is a very sharp attorney, by the way, and is involved in just about every Washington scandal of the past generation, does that give Abby Lowell the ammunition to argue back and say, wait, if you're only looking at Cook, then that's a political fishing expedition and not real law enforcement, and therefore the entire predicate of this investigation should be thrown out? That's a fascinating legal question going forward.
Absolutely. Libby, go ahead.
No, sorry, I was just going to say, I think you bring up a good point also about the fact that there is a nomination process, and as it relates to the Fed, so not FHFA, but as it relates to the Fed, just keep in mind, I think this has been a little bit lost in the dialogue today, that anybody who is replaced, so even if the courts do side with the president, and again, kind of open question about kind of the next steps on that, but even if they do, and President Trump is able to fire Governor Cook and then is able to nominate somebody to replace her, just remember, this is quite important, that the Senate still needs to confirm that person. And not only does the broader Senate, which requires 50 of the 53 Republican votes to support that person, that nominee would also have to first go through the Senate Banking Committee. And this might seem like a lot of kind of wonky D.C. talk, but it's really important because the Senate Banking Committee is effectively tied. So one Republican no vote, assuming that Democrats vote against whomever is nominated, would sink that candidate. And of course, there's quite a lot of precedent during Trump 1.0, also during the Biden administration, where the White House ultimately actually had to retract and pull their nominees because they couldn't get through Senate banking. So that is something this advice and consent role that the U.S. Senate plays, even though it may seem perfunctory, and oftentimes it is, Democrats or Republicans, usually senators like to vote in favor of whomever the president of their party wants in their cabinet and for the agencies. It's not always perfunctory, and particularly for the Fed, there have been instances again where the Senate Banking Committee has rejected whomever has been nominated. So that is a key step, and I think from our perspective as investors, really important in terms of this checks and balances, in terms of kind of the independence of the Fed going forward.
Yeah, you bring up a good point with Marvin Goodfried, Judy Shelton, Herman Cain, Stephen Moore, and others that failed to get that nomination under Trump 1.0. Steve, go ahead with the last word.
I want to end where we began with Ms. Slaughter, which is Libby raises its fabulous point. And the Supreme Court kind of made this point, which is that the Fed is somehow different from all the other agencies.
The specialness of the Fed.
There's a weird carve-out line where it says because we have the first and second United States bank, that the Fed is different. And the thing that's really interesting to me about what Libby said is, in general, Congress has done the president's bidding. And there's a really interesting question now that Libby's brought up that I might begin the report now, which is, to the extent that the Fed, does the Senate believe, and the Senate banking believe, the Fed is different, and we don't want to just do the president's bidding on the Fed the way we've done it on other issues. And I think when Congress comes back, if we don't get to them earlier, those are going to be the questions that we're going to be asking.
Love it. Come back to us tomorrow with what you learned.
Sure.
Thank you so much, Steve. Libby Cantrell, Eamon Javers, thank you all for joining us. And again, to Ms. Slaughter as well. Well, coming up, consumer confidence slipping in August. We'll look at what's weighing on Americans' view of the economy. Plus, the Russell hovering near its highest level since December. And now another Wall Street firm is turning bullish on the small caps. What it means for the state of the overall markets ahead. The exchange is back right after this.
This is The Exchange on CNBC.
Today.
Welcome back. Consumer confidence ticked slightly lower in August amid growing concerns about the labor market, while still 12-month inflation expectations climbed higher after 3 straight months of declines, she tried to say. Joining me to discuss is Steve Odland, CEO of the Conference Board. He's also a CNBC contributor. Steve, look, I know it ticked down a little bit, but by and large, the consumer is really holding up despite all of these headwinds in their face. Do you agree?
Yeah, these are really tiny ticks. I mean, it's been pretty constant here over the past several months, bouncing around a little bit. You do see some less positivity among younger consumers, but you'd see more positivity among the older consumers. Net, consumers are in neutral, and they're all waiting for the tariff situation to resolve itself. And inflation is still weighing on people, groceries and gas, some of the things that are everyday pocketbook items. So it would behoove the administration here to get these trade deals done, to create some certainty, provide that for consumers. By the way, it's also true of CEOs. CEO confidence is also stuck in neutral here, waiting for this uncertainty to lift, to understand what their costs are going to be and where inflation is going. So all of this points to, please get this done.
You know what, I do find it very interesting to your point about sort of the younger consumers potentially being a little bit more negative, more pessimistic about where things are going. And I was thinking about it, it sort of points to the 35 and under. So let's say someone born in maybe 1990 or after. And if you think about it, they were, about 10 years old when we saw the tech bubble bursting. And then there was 9/11. And then maybe right around the time they were entering the workforce, we had the financial crisis coming about, and then the housing market crashed. So then if they wanted to afford a home afterwards, when we saw the rebound in the pandemic, it was much harder. I mean, I'm just wondering if all of those influence sort of play on the way that they see the economic environment for themselves, because it was so impactful in those early years.
Well, look, they're our least experienced consumers, and there's been a lot of black swan events,
right.
in their
But also, look how valuable they are in their earning years, right?
Yeah, that's right. But they have the least wealth, too. So if you've got a lot of wealth and you're covered, you don't worry about it as much. It's always true among the younger consumers. But that's a relevant base. They're, getting to be a big chunk of employees and certainly a voting base.
It is very interesting when we've been talking a lot about the soft data versus the hard data. And in this report, the consumers sort of look at their personal financial situation and say things are okay, but their expectations of a recession keeps ticking higher. What do you make of that?
Well, it comes back to, where's inflation going? And when are interest rates going to come down? We were just talking about the Fed a moment ago. And as long as they stay high, the housing market's in neutral, that then becomes, inaccessible for a lot of these younger consumers. So it just goes on. And the uncertainty here creates a pall over the economy. And it is reducing growth. So I think we've got to get to, a more normalized situation with interest rates, with tariffs, with costs, so that we can then get back to business. And then the growth will pick up. And I think confidence will as well.
But speaking of the tariffs, it's also interesting that the purchasing intentions for cars rose in August, both new and used. And we know that car prices are seeing pressures from tariffs. And we also already saw some strength. So what do you make of that? That's a very big purchase decision for someone that might be a little uncertain about what the economy is bringing and the price of a car.
Well, I used to be the CEO of AutoZone. What we learn constantly is that cars are a tool, and you need an automobile that's working reliably in order to get to school, in order to get to work. So it's not necessarily viewed as a luxury item. It's viewed as something that is absolutely required in order to carry on their daily lives. And so, when they come to an end of life on these cars, and the age of cars is the highest it's ever been, and you've got end of leases and so forth, you do see a pent-up demand here.
All right, fair enough. Well, Steve Otland, thank you so much for joining us. Steve Otland of the Conference Board. Coming up, NVIDIA within striking distance of a new all-time high, but the chip maker's China connection is one of the biggest wildcards in tomorrow's earnings report. Did you forget that's coming tomorrow? We'll look at what to expect ahead of those results. The Exchange right back after this.
All now.
Welcome back to the exchange. It may look a little quiet if you look at the numbers. It is anything but, and we are near session highs across the board. The Dow racing a nearly 90-point loss. In terms of sectors, it's a mixed bag today, but check out consumer discretionary, up about 3.5% in August and on pace for a 4-month win streak for the first time in 5 years. Now let's go to Julia Borston for a CNBC News update.
That's right. White House Deputy Chief of Staff Dan Scavino will be in charge of hiring in the administration. The White House said today Scavino's appointment to run the Presidential Personnel Office will ensure the administration is staffed with, quote, the most qualified and America First driven workers. Scavino, a longtime Trump advisor, will replace Sergio Gore, who the president tapped to be ambassador to India. Iran's deputy minister says the country remains committed to diplomacy. Those comments coming after a meeting in Geneva with representatives from the UK, France, and Germany who are pushing to allow UN nuclear inspectors back into the country. Europe says Tehran will face a, quote, snapback of sanctions that were lifted in the 2015 Iran nuclear deal if it fails to comply. And Taylor Swift announcing this afternoon she's engaged to Kansas City tight end Travis Kelce. The billionaire pop star and the Super Bowl champ made the news official on Instagram. They've been dating for about 2 years. In the Instagram post, Swift wrote, "Your English teacher and gym teacher are getting married." Congratulations to the two of them. Back over to you, Courtney.
Absolutely. I want to send my public congratulations as well. She got her love story. We knew it all too well. Well, coming up, Bitcoin now more than 10% off its record high, but that's not dissuading our market guest who's staying bullish on crypto and warning investors not to lose sight of the bigger picture in this Lisa Cook saga. The details on all that coming up next.
Minimums.
Welcome back to The Exchange. The Fed's set to start another rate cut cycle regardless of Governor Lisa Cook's employment. My next guest says that is bullish for equities and crypto, and he's seeing opportunities in the sectors that surged following Powell's dovish speech at Jackson Hole. Joining me now is Eric Johnston. He's chief equity and macro strategist at Cantor Fitzgerald. Thank you so much for joining us. I'd love to sort of just get your first take on all of the news today surrounding Lisa Cook, and the markets call it somewhat muted reaction when we don't even know if she's able to continue her job as a member of the Federal Reserve. Why are the markets so sanguine?
So while I completely understand the concerns around Fed independence, around going against the norms of what we've seen over the prior decades, the reality is that this is very bullish for risk assets. This is one step closer to the board being much more Trump appointee dominated. They're going to be incentivized to have a strong economy for the next 4 years, and ultimately risk assets like cheap money. And that's one of the reasons why we think that you're going to see strength in risk assets, over the coming years. One of the concerns from the financial markets is, will the curve steepen? So yes, they can get short end rates lower, but due to the potential inflationary impact, is that going to pump up the long end of the curve? And our view is that there are things that they can do from both the Treasury and the Fed to also help to bring down the long end. And we can go through some of those, but the idea is that the Trump administration wants mortgage rates lower, so they are focused on the long end of the curve. And there's a lot of tools in the Fed's tool belt and a lot of tools in the Treasury's tool belt to be able to control that long end of the curve. So ultimately, I think this is quite bullish and sort of one step forward to that rate cut cycle.
I want to sort of circle back then on some of those comments. I mean, you said that the Fed is even further or is incentivized to do what is good for the economy to make it stronger, but isn't that always the case? And then are you somewhat suggesting here the Fed is no longer independent because this is the pressure that could be placed on them if they don't cut interest rates?
So typically the desire of the Fed is for the long-term health of the economy.
Right.
So they're going to be looking out 5, 10, 15 years and trying to balance inflation, with employment. And one of the reasons why there has been this independence. And so I think just the reality of, however you want to call it, of people that are going to be going into the Fed that have, certain thoughts around wanting to get rates lower and have a strong economy today, and believing that AI and other secular trends are going to ultimately bring down inflation. Whether that happens or not, it's to be determined. But if they go in with that view that ultimately these secular trends are going to do that, they're going to be much more likely to run an economy that's a little hotter than would normally be run by a Fed.
Okay, so I guess then we'll set aside whether this is going to happen or not. You are making the assumption that someone that comes in, if Lisa Cook is not able to continue her role, will be more apt to continue to make decisions that are bullish, maybe not only for the long run, but also for the short run. So if you are in your camp and you believe that, give us some ideas about why you think particularly that's good for housing. Of course, we know if rates are lower, but are there particular names there that you're liking? And what does all of that have to do with crypto?
Okay, so absolutely, in terms of, we like the home builders, and we also like small caps. I think small caps do very well in this current environment. So not only are you going to get a rate cut cycle, that's going to benefit not only companies that have more debt, but also that are frankly more speculative, right? Lower quality, where bringing down those rates is going to increase risk taking, and you're more apt to buy a riskier equity. In addition to that, as we look into 2026, I think the economic outlook is actually very strong. So we're going through this period of uncertainty right now. Tariffs are seeping into prices. But as we look into 26, you're going to be lapping those higher prices due to tariffs, and you're going to be lapping the uncertainty. And you have all the investment coming into the U.S., whether it is onshoring or the investments from overseas. And that's one of the reasons why you're seeing earnings estimates go up, not only for the S&P 500, but also for example, small cap. Small cap earnings estimates have been very challenged for, frankly, years which is one of the reasons why they've been a huge underperformer. But those earnings estimates looking forward are actually starting to turn up, which we think is very powerful. And, pivoting to crypto, we've been bullish on Bitcoin for a while now, is that we think that it will continue to move higher, and having cheaper money, increased money supply, institutionalization, the legislation that's passed, support from the administration, all of this should continue to be very positive for Bitcoin. And we think this, rally that we've seen will continue.
Okay, so even though Bitcoin is down 1.5% today, you are not discouraged about looking beyond that. Eric Johnston with Cantor Fitzgerald, thank you very much for joining us.
Thank you.
Well, coming up, home furnishing names extending yesterday's losses. President Trump mentioning the possibilities of furniture tariffs again today in the cabinet meeting. RH, Wayfair, Williams-Sonoma, Ethan Allen, and Lazy Boy all under pressure. Wayfair had been up nearly 3% earlier in the session, but shares have reversed course. We'll hear from the Ethan Allen CEO. That's coming up next.
Now.
Welcome back to The Exchange. Time for some show and tell, where we can show you a chart and then tell you the story. Home furnishing companies in focus after President Trump announced a tariff investigation into imported furniture. Names like RH, Wayfair, Williams-Sonoma fell sharply on the news, given their higher exposure to imports. That was yesterday. And then today, they moved lower again after the president warned of a, quote, very substantial furniture tariff during today's cabinet meeting. But look at a name like Ethan Allen. It manufactures 75% of its products in North America, including 45% here in the U.S., in states like Vermont and North Carolina. Now, shares briefly turning positive after the tariff mentioned at today's cabinet meeting. Here's Chairman and CEO Farouk Kathwari on why the company is well positioned to weather any tariff turmoil. Farouk, thank you so much for joining us. I'm sure it was not an easy decision.
But I think maintaining the great level of quality, the great level of service is as critical as the fact that we have the ability to make it right here in North America. Very, very important. It gives us a great advantage.
And of course, some of it is made in the U.S. and the rest of it is made in Mexico. So, of course, we do need to pay attention to what happens with tariffs there. But Ethan Allen, largely more insulated than some of the other furniture makers. Well, coming up, Trump's immigration policy could cost California nearly $300 million in lost GDP. The impact mass deportations have had on local businesses. That's coming up next.
Famous to bold.
Welcome back to the Exchange. California's economy is the fourth largest in the world and aided in large part by immigration. A new study from the Bay Area Council's Economic Institute, it's a think tank, found that more than 1/5 of California's 10.6 million immigrants are undocumented. And mass deportations could cause $278 billion in lost GDP. Over the next few days, we're going to be taking a look at three key areas of the state's economy to examine the potential ripple effects of the Trump administration's policies on both immigration and trade. Kate Rogers is in San Francisco with a look today at the hospitality sector. Kate, what have you found?
Hi, Court. In downtown Los Angeles, high-profile ICE raids, accompanying protests, and the deployment of the National Guard in June set off a ripple effect on local businesses. The Independent Hospitality Coalition, which represents 900 local businesses and workers,
we are seeing a blue-collar boom. In the first 7 months of your administration, real blue-collar wages have taken off. And the only other time that they've done this in the past 70 years was in your previous term. Your efforts on tax, trade, and deregulation have boosted paychecks for American workers while slowing the pace of inflation and lowering the cost of energy. Inflation has plummeted to just 1.9% since you took office, and the economy rebounded with real GDP surging 3% last quarter. The blue-collar boom coincides with a CapEx comeback. In anticipation of your one big beautiful bill becoming law, CapEx increased by American businesses by nearly 14% in the first half of this year. And as you and I talk about frequently, and as that chart or that photo attests, we are going to see, I believe, a bigger CapEx boom from here. This is just the beginning. Just the beginning. You have saved this country by making it the best place in the world to do business again. Treasury is helping to implement these new provisions, as well as no tax on tips, no tax on overtime, and no tax on Social Security. This weekend, I will be meeting with workers from local restaurants to discuss the positive impacts of the pro-labor reforms on no tax on tips. And I have to tell you, thanks to you, when I go into a restaurant or stop by a hotel doorman, I am the most popular person there. And since my first job at age 9 was as a busboy getting tips, I am going to spend Labor Day going from restaurant to restaurant talking to workers who receive substantial amount of tip income. So I'll hear directly from them how your one big beautiful bill is increasing their take-home pay and making a big difference. Now, we can also talk, that is domestic. On the international front, you have leveled the international trading system whereby countries took advantage of us, and that's over. It's over. The Treasury Department is taking in record tariff revenues that I had been saying was running at a rate of $300 billion a year. You chastised me for saying that it's not, that number is too low. And as usual, you're right, that we had a substantial jump from July to August. And I think we're going to see a bigger jump from August to September. So I think we could be on our way well over $500 billion, maybe towards the $1 trillion number. This administration, your administration, has made a meaningful dent in the budget deficit. The average budget deficit during this term is 26% less than the last 12 months under Biden. And even the CBO, and we don't agree with CBO on everything, as you said, last Friday, on a summer Friday, had to admit that they believe over the next 10 years, the budget deficit will be $4 trillion lower than they had previously scored. $4 trillion, 3.3 trillion of tariff income, 700 billion of lower interest costs, and I would expect that number could go up from here. So, Mr. President, your return to the White House marked the return of the American worker. Thank you for reclaiming Labor Day for the American people. You're growing the economy for everyone, especially the middle and lower income households who suffered disproportionately under the last administration, and it's an honor to do this under your leadership.
Great job. You're doing great. Thank you very much, Scott. Brooke?
Sir, I dropped my second son off of college last week.
Rogers for jumping in there with Secretary Bessent. My apologies for jumping in to Kate Rogers there with Secretary Bessent, that you are watching the cabinet meeting happening live with President Trump, making some comments there talking about the blue-collar worker paycheck boom. He believes that we will see a CapEx boom. He thanked the president for making it the best place to do business and more. Let's bring in Megan Casella for some reaction on what we're hearing. Megan?
Hey, Courtney, so we're almost 2 hours now into that cabinet meeting, and this is the first time that we've heard an official mention the Federal Reserve. It was Scott Bessent saying that the topic that's at the front of everyone's mind today is the Fed, and he was really applauding the president for what he says is giving the Fed more credibility. He said at the top there, as you guys were getting into those comments, that the Fed's independence comes from a political arrangement between itself and the American public. Having the public's trust is the only thing that gives the Fed credibility. And you, he said to the president,
are restoring trust to the government. So, Courtney, with all that's been going on today and all of the commentary and focus on Lisa Cook's firing and the president's move to fire her and her defiance in saying that she's not resigning, we have not heard anything from the White House except for what we heard from Secretary Lutnick on Squawk Box this morning. We really haven't heard anything official since that letter was posted to Truth Social. This is the first round of fresh commentary we're getting from the administration, with the Treasury Secretary sort of alluding to the move, not pointing to it directly, but saying that the president is restoring the Fed's independence with his recent moves.
Megan, thank you so much for bringing us those comments there from Besant as we got in just shortly after that. Appreciate that very much for the catch up. Well, coming up, shares of NVIDIA are up nearly 35% since its first quarter earnings report in late May. And with CEO Jensen Huang negotiating with both the U.S. and China, we'll look at just how impactful Beijing could be for NVIDIA's bottom line. That's coming up next. As we look ahead to NVIDIA earnings, uncertainty around its China business is an overhang after reports that NVIDIA has halted production of its made-for-China chip. Christina Partsilevis has more. Hi, Christina.
Hi, Courtney. Well, for NVIDIA, the China story is less about what just happened and more about what comes next. The company's latest quarter will almost certainly show zero revenue from China after the H20 export ban, which is a stark contrast to the estimated $16 billion backlog that Oppenheimer said existed when the ban hit back in April. The stock is definitely trading near all-time highs. Right now it's at 181, but you can see it's up 35% year to date. But it faces just this critical test. Can management provide any visibility on China's return? U.S. officials began granting limited licenses in August, but with the quarter ending July 31st, analysts don't really expect any immediate revenue recognition coming from China. Chinese authorities are also simultaneously pressuring domestic firms to buy local alternatives like Huawei chips instead of NVIDIA chips, just as NVIDIA is trying to restart supply. Recent reports also suggest NVIDIA is already slowing H20 production due to this pushback, though the company only said, quote, it constantly manages supply chains to address market conditions. Vague, but they're not denying it either. The wild card, though, is NVIDIA's new B38 chip designed for China, with speculation that President Trump's administration could approve exports of these even more advanced AI chips for China. And that could mean today's muted H20 revenues gets replaced by a much larger B30 sales down the line. And this market's worth about $50 billion in opportunities. So definitely something investors are paying attention to. Courtney?
Thank you so much, Christina Partsinevelos. That is it for us. Thank you for watching The Exchange. Power Lunch starts right now.
And welcome to Power Lunch. I am Brian Sullivan. Breaking news at this hour. President Trump holding a cabinet meeting right now. That is a live look. All the heads of the various departments. In fact, you just heard right here on this network from Treasury Secretary Scott Bessent. We're going to monitor this meeting, bring you all the headlines as they come out, any relevant comments made by any of the key cabinet secretaries or the president himself. And we will bring those to you live. There you can see Secretary of the Interior Doug Burgum, Secretary of State Marco Rubio to the president's right. President Trump is speaking again. They make comments about energy. They make comments about markets. They make comments about fiscal or monetary policy. And, of course, comments about Lisa Cook on the Federal Reserve. And we will bring those to you. In fact, why don't we dip out of this and start there? Because this really is the bombshell news of the day. President Trump firing or saying he's going to fire, attempting to fire Fed Governor Lisa Cook. It is a fluid story. It is kind of a fast-moving story. Steve Leisman has been on it all day. Steve, we appreciate you joining us. I have seen, both on our network and various networks, I've seen the term fired, firing, wants to fire, will fire, thinking about firing. Where do we stand right now?
We honestly don't know what this is. He has fired her, according to him.
She says no.
Well, let's look at their latest statement. The attorney for embattled Fed Governor Lisa Cook actually issued a fiery statement today saying Cook would file a lawsuit to challenge her firing by the president. Cook attorney Abby Lowell saying, quote, President Trump has no authority to remove Federal Reserve Governor Lisa Cook. His attempt to fire her based solely on a referral letter, lacks any factual or legal basis. We will be filing a lawsuit challenging this illegal action. Now, this, importantly, appears to be the first time that Cook has actually challenged the, quote, factual basis of mortgage fraud that's at the root of the president's decision to fire her. The president said he fired Cook, quote, for allegedly making false statements on one or more mortgage agreements. Cook has never explained her side of the story publicly. Unclear if Cook was at work at the Fed today. No comment from Fed Chair Powell whether he will enforce the president's firing decision. Unclear how or if the president himself will enforce this decision. If the president replaces Cook, he will have a majority of the 7 members of the Federal Reserve Board of Governors once Stephen Myron is confirmed. That's the CEA chair. No charges again have been filed. There's been no ruling on the facts, raising questions about the extent to which this, at least partly, Brian, is politically motivated to give the president greater control of the Fed. Some people saying that if this is allowed to stand, you can say goodbye to the independent Federal Reserve.
Although, and I heard you say this earlier, the CNN, I think, got the documents that she listed a primary residence in 2 different states. Obviously,
Right.
that's not possible, and there are benefits. So there is a...
Well, there are actually exceptions that allow you to do that. There are 5 of them. We don't know. Again, we don't know the story. We know that we have
But
not
no
heard her
charges
side
have
of the
been
story.
filed. As Jim Cramer said this morning, there's no charges against her.
The status is that there's been a criminal referral from the FHFA director to the Justice Department. Justice has not yet filed charges, and Cook has not yet responded to the criminal referral in terms of the factual business of just what you're asking. Brian, there are people who are ready to convict, people who are ready to say, let's wait a second and see what her side of the story is.
Okay, so we'll leave that to the future when we actually get some hard information. Let's talk more about the Federal Reserve, because here's a weird situation. The president basically says, I fired her. She's gone. We don't know if her badge works, if she can physically get in the building, correct? We don't know that.
We don't know that.
Is it possible the president moves quickly to try to confirm somebody else into Cook's spot, but Cook wins whatever lawsuit or appeal she's going to file, and now you ostensibly have 2 people who claim they have the same job?
That could be part of what happens before you get to that confusion is you have to have hearings in Senate banking, and then you have to have the full Senate approve that person. It is unclear, among other things at this time, Brian, the extent to which the Senate wants to go along with this. We just had an interesting conversation with Libby Cantrell from PIMCO, and the question would be, The Senate and the Congress have gone along with a lot of what the president has done, which has been unorthodox or unconventional, to say the least. The question is, do they want to draw a line in keeping the Fed the way it is, or are they willing also to give the president greater power or sway over the Fed?
Now, correct me if you are the Fed historian, so I defer. But you know our friend Richard Clarida.
Yeah.
Now with PIMCO.
Right.
He stepped down from the Fed in 2022. So you're going to read, folks, you're going to read a lot of stuff about how there's never been a Fed governor fired. That is accurate, correct? I don't think there's ever been a Fed governor who has been forcibly removed from
by
his
the
or her
president,
role.
right, or for cause.
But we have had Fed governors who have quit under extreme pressure or maybe the threat of eventually being fired.
All that is true.
Richard Clarida, 2022.
Robert Kaplan and Eric Rosengren, by the way, who the IG from the Fed found actually did no wrong, even though he was trading the bonds that the Fed was buying, or trading the kind of bonds the Fed was buying. But ultimately, the IG determined this was not in contravention of the Fed's conflict of interest rules.
But those three gentlemen, and they're all different situations, but they all quit basically either out of frustration or they were just trying to get ahead of how about we say, a different possible outcome?
I think that's true, but notice that the president was not involved, right? And so if what we're talking about here, Brian, is the independence of the Federal Reserve, one of the things that might be a hallmark of that independence is that you allow the Fed to sort of take care of its own, in the sense that if you have a problem, the Fed takes care of it, either through a resignation or in some cases we've had charges filed or a referral from the IG to the Justice Department from the Fed IG rather than the president getting involved. The problem with all of this is if this came out of the blue, it would be one thing. But this comes after a concerted effort by the president, right, to get the Fed to lower rates, to call for Powell's resignation, to create an issue around the remodeling of the Federal Reserve Bank, all of which may make sense individually, but as part of a campaign where what you're trying to do, or what the intention of Congress appeared to have been, is to create an independent Fed. In that case, you cannot ignore the context. And as you said earlier, Brian, you also can't ignore what the documents say was done.
Time will tell. It's a hell of a story. It's kind of an unfortunate and ugly story on many levels. We're glad you're on it. We'll see where this goes because, to your point, we actually don't know.
Yeah.
But we're glad you're here. Steve Leisman, thank you very much.
Pleasure.
All right, we're going to go into that cabinet meeting where I believe U.S. Trade Representative Jamison Greer
Organized labor voted for you is because of
is
trade
speaking.
Policy and the policies you've
This
had
is the
and
number one guy on
advocated
trade
for
and
4
really
years or
tariffs.
more. You have
Let's listen
reset
in.
global trade policy in the past few months, and it shows that's been working for American workers. When you look at President Biden, in the last quarter of 2024, median weekly earnings fell 2.1%. In the first quarter of your term, they went up 3.3%. And that's why we're doing the trade policy we're doing. It's to help the workers of the United States of America. And they're the best in the world, but they can't do it without a level playing field. And you have flipped the script. For many years, the other countries had high tariffs and high non-tariff barriers, while we were open to all of their labor and services and goods and capital. You flipped it. Now we have the tariffs, and they have lowered theirs and the non-tariff barriers. And we couldn't have done it without you and the leverage you've created. So between the tariffs and the deals, the hot streak continues for the workers of America. So thank you.
Thank you very much. Really good job, by the way. He's a good negotiator. Very good negotiator. Thank you. Please.
Well, Mr. President, I feel like, as everybody here has talked about how great working with this team is.
All right, that was Trade Representative Jamison Greer speaking. Again, we heard from Treasury Secretary Scott Bessent a few minutes ago. We get comments from some of the other cabinet members that you want to hear from, and we will dip back into that cabinet meeting happening right now at the White House. But let's turn now to the markets and your money, because with all this stuff going on, guess what? Stocks, they're still higher. The bond market slowly starting to shift, all as the Fed feud unfolds. Joe Davis is chief global economist at Vanguard. He is head of Vanguard's investment strategy group. Joe, don't worry, I'm not going to ask you to dive into the politics of this, but I will ask you, does a fight over any Fed governor like this, without going into the details, because we don't To be frank, we don't know much. But a fight at the Fed or about or over the Fed, does that influence how you or what you recommend to your clients in any way?
Well, it certainly could, but it's not right now. I mean, clearly Federal Reserve independence is important, primarily because it just makes monetary policy just more effective. And that has implications for the interest rates we see and for the financial markets that we participate in. Again, we ultimately tend to focus on economic fundamentals. And that's clearly what I think, despite the headlines that we are seeing at the moment, more likely than not will drive the markets over the next several months.
Yeah, if Cook, we don't know what's going to happen. Cook is removed. Somebody else comes in that is more dovish, that they are more likely to agree with faster or deeper cuts to interest rates. Do you adjust your models and say, well, I guess we'll be 0.25% or 25 basis points lower faster than we thought? Is that kind of how the thinking would go?
It could go. I mean, this is not the first time that we've had, debates, even among portfolio managers, or is the Federal Reserve writ large, dovish, hawkish? These are conversations we have all the time, just in sort of normal environments. I think the also thing is what the bond market is saying, because what the shape of the yield curve may be, where inflation expectations are, currency markets, they will have a very large bearing. And in fact, are some of the indicators that we will ingest and think about for our outlook.
Yeah, we look at the U.S., we look around the world, and the U.S. has had a pretty good run. Yep. But the rest of the world, Joe, as you know, has had a better run than the United States. Do you see a trend, the international over the U.S. trend continuing, or will we pivot back to U.S. outperformance?
Well, we believe there is a timestamp to U.S. exceptionalism. And that's not necessarily a pessimistic statement. Now, again, we have said this for the record for several years. And so clearly the U.S. markets have outperformed. The S&P 500 has dominated any equity market. But we have to be forward looking. And so I think whether you are bullish on AI, for an example, or you're bearish on AI, tends to leave you down to the same sort of let's diversify outside the U.S. because it's unlikely we will continue to see this outperformance. We just can't time when that sort of transition will occur.
Yeah, and it's what's amazing is not only has gold outperformed the U.S. equity market, I think, over 25 years, but many bonds have as well, because you have the 2000 collapse, you've got the 2008 to 2010 collapse, you had that very brief tariff collapse. Where is there opportunity on the bond side? We love talking stocks, but guess what? Yes. There's a lot of money to be made in the bond market as well, Joe.
We couldn't agree more, and it's been one of our theses of our entire investment management team. Our outlook this year was on if you're going to take some active risk, the fixed income market is probably more compelling today than it has been in 15 or 20 years. We have a higher interest rate that's above the rate of inflation. One of my colleagues says bonds are back, and I think it's a great phrase. You're earning a higher coupon, and whether you're a little bit skittish on the equity market or just trying to drive real returns, it's solely not an equity story, which was the case 5 or 6 years ago. We've been rewarded on that. But from a return perspective, as well as a diversification perspective, fixed income is very compelling. I mean, that's both corporates as well as munis.
Yeah, and quickly on the Treasury side, the 230 spread, that yield curve, it's the highest in 3 years. It's really moved off the bottom. Do we need to lock in return now? If one of our viewers, your clients, listeners right now says, you know what, I'm nervous about where rates are going to go. If you want to get 4 or whatever % on Treasury, should we lock in, buy a longer dated note now?
Well, I think you'd want to think about it depends, all right. But I think you want to have some intermediate exposure as a starting point. If you go short duration, where people have wanted to go, they've missed that sort of upper sloping yield curve that you're talking about. If you're trying to lock things in, I would just caution: what's the exit strategy when the Federal Reserve, let's say, they ease 2 or 3 times? Are you getting back in? Just think that through. It's the re-entry point that's usually the challenging part of being a little bit more tactical in this environment.
Joe Davis, Vanguard. Joe, really appreciate you coming on. Appreciate your kind of flexibility and rolling around at the top with all the breaking news that's happening. Joe, thank you.
Thanks.
All right, so this is a natural segue from Joe Davis of Vanguard to Rick Santelli, and the bond report. Rick, you obviously heard, oh, no, Rick. Oh, no, Rick. So now I'm Rick. All right, we just referred to the 3-year and the 2-year Treasury note. Well, there has been a move. Look at that far right side of your screen. By the way, in New York Knicks colors. Some would say Mets, but I'm not going to say that. The spread between the 30 and the 2, the widest it has been in 3 years. There's a lot of uncertainty, obviously, not just around Lisa Cook and the Fed. That's today. We'll see where that goes, but also around Fed policy. Will they agree, disagree to make a rate cut? We will see what happens. That was your daily bond report, brought to you by Brian Sullivan. All right, is the energy trade losing a little bit of juice? An industry insider is going to weigh in on that. Plus, Trump says he is killing off a big wind farm off the Connecticut and Rhode Island coasts. The governor of Connecticut is not happy about it. He is here live with whether he is ready to deal, and it's a busy day. Let's have a little bit of fun. Delicious fun. Celebrity chef, restaurateur, and entrepreneur Wolfgang Puck will join us on set, and there's some talk. He may bring meat. We're back right after this. Famous bull. All right, welcome back. Let's talk oil and gas. Oil prices today down a bit, retreating from a nearly 3-week high. Investors kind of reassessing any potential disruption to Russian fuel supplies. Ukraine's retaliatory strikes on Russia disrupting Moscow's oil exports and causing some gas shortages in various parts of the region. Now, in the meantime, President Trump renewing his threat to impose sanctions on Russia if there is no more progress toward a peace deal in the next 2 weeks. We'll see if that happens. But what does all of this mean for the oil and gas stocks? Well, your next guest is bullish on parts of the oil business. And today, he's calling 10 different exploration and production companies as outperforms. Joining us now to talk about it, Neil Dingman. He is energy analyst at William Blair. Neil, great to have you on the program. I love your names because these are not the Chevrons and Exxons of the world. These are the Diamondbacks. These are the Vipers. These are the Permian Resources, kind of the more mid-cap size names. Diamondback is a name that every time I talk to everybody, they say, look at Diamondback and what that team is doing. Why do you like them?
I mean, that's simple. By the way, nice to have you. Good to see you, Sully. Diamondback is easy. It's the lowest, the company with the lowest well break even. Company makes money down to even $40, $35. And, you know, even at 65, where we're at today, 63 to 65, they're just printing dollars. So you look right now, and, you know, not to mention, you mentioned Viper. They have that subsidiary public company, Viper. It's the largest mineral company out there by a large extent. Having that combination, I just think, gives them a huge, huge advantage.
Yeah, and you referenced oil and gas prices. And by the way, if you figure out where prices are going, let me know, because every expert I talk to has got a different view, and they'll probably both eventually be right. But the president did say, he kind of promised the voter he wanted lower oil and gas prices. The question is, how low might it go? If it goes down, maybe it goes higher. But do you feel like there is kind of a floor at $60, Neil?
I do. We're a bit non-consensus here. We're calling for a bit of a oil bottom. I guess you'd almost call it an inflection point, and that's driven by a couple things. I think, one, our data shows that U.S. production. Remember, I think investors forget that oil is right now. U.S. production is around 13.5 million barrels a day, but the U.S. companies have to produce 5 million just to keep that flat. It's the only industry where you have that type of declining asset out there, if you will. So one, I think the supply side, especially domestically, is going to be more challenging. And then even the demand side, I think, again, EIA, IEA, others estimate, I know they're calling for $50-ish oil next year. I mean, shoot, they're wrong probably 30% of the time. So I'll take the bet the other way of what they're saying.
Yeah. And by the way, OPEC is a little more bullish on oil as well. So kind of a split between the IEA, the acronym agencies, and then, of course, OPEC. Back to the names here. Crescent Energy, Magnolia Oil, Mach Natural Resources. These are not widely known names. I mean, I've heard of them. I couldn't tell you a whole lot about them. What makes these smaller caps outperforms to you?
That again, kind of like a Diamondback, they can operate in a low environment. You look at somebody like Magnolia, you mentioned, this little company has over 500,000 acres, all in the Eagle Ford. They virtually have no debt, so they can take on. And, again, if there is pressure on prices, a lot of these companies, I'll use Magnolia as an example, they can come in, buy assets on the cheap, and add that to their existing production. So, again, some people view a temporary lower prices as just a negative. Look, a better company like a Magnolia is going to come in, use that to their advantage, and take that external production, add it to their organic, and make the company even better off for it. And look, Sal, I think you know this better than I mean, the amount of shareholder return my group is paying out, I think, is second to none. I would put that up against any other sector analyst and try to show another sector that's paying out more shareholder return, whether that's buybacks, whether that's base dividends, whether that's variable dividends, you name it.
But here's the weird sort of dichotomy, Neil, is that the push for free cash flow return, shareholder return, is now. It's not 5 years from now. It is right now, which means these companies, the ones you cover and many more, they want to kick a lot of that cash back to shareholders or make decisions that benefit the stock. That may not always mean drilling for more oil. And there are some very smart people I've talked to that say they think U.S. oil production is going to go down, not up, because companies, well, they may listen to the president, respect what he says. They're going to do what's best for shareholders, not just because the White House tells them to do something.
That's right. I think the drill, baby, drill, that's not going to happen. I think it's, just the opposite of that. And I think what's key, though, for the better companies is, fortunately right now, Sully, they're reinvestment rate for most of them is only about 45%. The ones that are not as good can have a reinvestment rate as high as 75%, meaning they have to reinvest at least 75% of their capital to keep production flat. So again, the Diamondbacks, the Magnolias, the Permian Resources, some of these that you mentioned, fortunately, they have such a low reinvestment rate that I think, one, they can keep production flattish. None of them want to grow it at these prices. It doesn't make sense. But they can keep paying out these kind of returns to shareholders. So again, if a shareholder wants to get a big dividend, if they want to see their per share growth go up, I just don't think there's a better sector to find.
Neil Dingman, William Blair, equity analyst, and we've got outperforms on 10 and Pearl Civitas Resources, just sitting out there by itself with the market perform. Neil, thank you very much. Appreciate it.
Thanks, Ollie.
All right. Up next, the biggest risk to the market right now and how you can protect yourself and your portfolio from them.
Us.
All right, welcome back. Time for Market Navigator, where we try to help you figure out how to deal with the market's ups and downs that are clearly going to happen maybe tomorrow, next week, next month, next year. We don't know when, but I can tell you we do know markets will go up and they will go down. Joining us now is Paisley Nardini, Managing Director and Head of Multi-Asset Solutions at Simplify. All right, Paisley Nardini, welcome to Market Navigator. The firm is called Simplify, but I will say that some of your strategies here are not as simple for the sort of the retail investor. So in plain English, lay out what do you think that people should do now to mitigate some of the bumps that no doubt are coming down the road?
Awesome. Well, thanks for having me on today, Brian. Really happy to be here. And you're right. We're doing something a little bit different, and that's by design. Very intentional. When Simplify came to market in 2020, we wanted to offer our investors a way to access parts of the market that could help them navigate the exact volatility and uncertainty that we're seeing today. So I would say everything feels really calm on the surface. Volatility's low. Equities are up 10+% this year. Bonds are actually doing okay. And that gives us a bit of pause for concern. We're still bullish long term on the market. There's a lot of uncertainty ahead of us, whether it be employment data, price data, what direction is the Fed going to take, what's going on with tariffs. All of this warrants a little bit more of a diversification play in portfolios for the back half of this year, in our opinion.
Also, just who's going to be on the Fed. But that's a different story that's leading the market today, Paisley. You say that if we go into bonds, that we should maybe look at high yield where spreads are less than 3% from sort of the basics of high yield. So where are we, if we want to go into credit, where are we investing in high yield?
Yeah, great question. So yields across the board are pretty tight as relative to historic standards. This would lead many investors to say, I want to get out of really anything that has credit spread. We think there's a more prudent way to access these parts of the market that are still kicking off really attractive yield for those portfolios that do need income. So the way that we think about accessing these higher yielding parts of the market is through a more prudent hedged approach. And so high yield bonds, if you have a mechanism or a hedge embedded within them to think about cushioning returns when spreads widen, that's a way to still access those returns in a more prudent way. And that's how Simplify thinks about the high yield market today.
Yeah, it's interesting. We talk a lot about treasuries. We talk a lot about stocks. Maybe we don't talk enough about the in-between, sort of that credit market that acts a little bit like stocks. But we'll say goodbye. We'll bring you back soon. Paisley Nardini on Market Navigator. Paisley, thank you.
Yeah, thank you.
All right, you're welcome. Let's get now to Julia Borston for a CNBC News update.
Hi, Brian. Well, President Trump said during a cabinet meeting today the U.S. government would seek the death penalty for anyone found guilty of murder in Washington, D.C. And nearly 2 dozen states have abolished the death penalty. The president's push for capital punishment comes as the federal government has taken over the D.C. Police Department and as Trump has deployed National Guard troops in the Capitol. A federal appeals court ruled today that the battleground state of Pennsylvania can no longer throw out mail-in ballots if the voter writes an inaccurate date on the return envelope. The three-judge panel said it was unable to justify the discarding of the ballots, which it says has resulted in the disqualification of thousands of votes. For today's ruling to be reversed, the issue would need to go to the Supreme Court. And the new Cadillac Formula One team just added 2 veteran drivers to its lineup. Sergio Perez and Valtteri Bottas are returning to the grid after being dropped at the end of 2024. The GM-backed American team will join F1 in 2026 as its 11th team. Brian, back over to you.
This is a big move. I'm the racing guy. Sergio Perez from Mexico. They call him Checo. Cadillac, GM, obviously a huge market in Mexico. Checo kind of got whacked a little maybe before he should have. Bottas from Finland. Sweet mustache, mullet. You can't go wrong with that.
I'll let you have the last word on that one, Brian.
There we go. That's it. Went to my first F1 race in 1978. All right, coming up, the president shutting down a massive offshore wind farm. The governor of Connecticut says it's the wrong move at the wrong time. And Governor Ned Lamont of Connecticut will be here live to make his case coming up.
Co.com.
Welcome back. Some big news in energy the last couple of days. The Revolution Wind project was halted by the Trump administration on Friday. Revolution Wind is a big offshore wind farm being built off the coast of Connecticut and Rhode Island. If completed, it would help power more than 300,000 homes. But Trump says the project is over, citing some environmental and security concerns. But here's the thing, Revolution Wind is not some pie-in-the-sky project dream. It's not only already being built, but it's actually close to being finished. 45 of the planned 65 wind turbines have already been installed. Denmark-based Ørsted is the developer. As you know, as we've talked about, that stock's been crushed over the past year as this and other projects took a hit. Now, Trump talked about energy earlier today and made it pretty clear in the Trump way that he is not a fan of wind energy, and he referenced the United Kingdom and its reliance on wind.
And windmills, we're just not going to allow them. They're ruining our country. They're ruining everyone. If you look at, I hate to mention countries, but you look at the UK, what's happened at UK, they have energy costs have gone through the roof. It's because of wind. They want to do everything, close up the northern parts of the country. They have oil that's tremendous. And they closed it up, and they've been building windmills all over the place. And I tell them, you're my friends, but man, you're going to have a bad awakening very soon. It's going to be very bad. They're ugly. They don't work. They kill your birds. They're bad for the environment. And if you look at them from a house, your house is worth less than 50%.
So there's obviously a lot to unpack there, but is there any scenario where a deal could be reached to keep Revolution Wind spinning, like a deal was just reached to keep a big offshore wind farm in New York going? Joining us now in a Power Lunch exclusive interview is Connecticut Governor Ned Lamont. Governor Lamont, I'd like to get you on in better circumstances, but let's talk about this. You saw what happened at the Empire Wind in New York. It was basically canceled. Then there was some deal made. It came back online. Do you think there is some sort of chance that you and your team could reach a deal with the Department of Interior or the White House to keep Revolution Wind going?
I sure hope so, and I'm going to try, Brian, because this decision was sudden, erratic, and insane. Look, as you point out, Revolution Wind is in the 8th inning, and it's going to generate 700 megawatts of power for our region. It's going to bring down costs for people. It's almost done. It turns on in 6 or 8 months, and this is a breach of contract. President wrote The Art of the Deal. The next sequel should have been A Deal is a Deal. We made a deal. We have all the permits. Money's been expended. Let's get this over the finish line.
Dust off my law books, Governor. You said breach of contract. You think there's a lawsuit here?
Let's sit down first. I'm looking forward to sitting down with Doug Burgum. I've talked to Secretary of Energy. See what we can do. I don't know what their objections are, but let's see what they are.
So you have spoken, and we're going to speak with Secretaries Burgum and Wright, by the way, in about 2 weeks at a big conference. But have you been in contact with them or their offices?
I have. I talked to Chris Wright, and I'll be talking to Doug as soon as he's back, and look forward to seeing what was up. You know, we had a deal. You know, they said, look, I don't want any new wind power. I said, okay, how about wind power that's almost complete?
Governor, I apologize. Yep. I sincerely apologize for cutting you off. Sit tight for a second. President Trump is speaking about Fed Governor Lisa Cook.
Travis Kelce and Taylor Swift are engaged, and the world wants your reaction, sir.
Well, I wish him a lot of luck. No, I think it's...
The question changed. Governor Lamont, you're still there, I hope. I apologize, sir. I guess he gave a very quick answer on Lisa Cook, kind of what we've been... You know that story, obviously. You know what a big deal that is. I found Secretaries Burgum and Wright to be informed and pleasant, at least to me, in the media. How have you found them? Do you think they're willing to engage and negotiate?
I do. We had talked about this going back, many months. This took me by surprise. It took, not everybody in Washington knew about this. It was a sudden decision that came out of the White House. And I think we'll be able to get this corrected pretty soon. I sure hope so.
So here is my concern about wind. I've got a lot of friends on the New Jersey shore. They don't want to look at the wind turbines. I don't own a house there, but it's their problem, not mine. I get it. But I guess when I heard that this project would be canceled, but 45 of the 65 have already been built, if this project were to not go forward, what would happen to the giant wind turbines? Would they just kind of sit there rotting?
Well, first thing that happens is much more likely we have blackouts in coming years because the energy use is going up. And this is a way that we could generate a lot of electricity now. I'm talking to the Trump administration about natural gas and nuclear and other things we can do to take longer. So it will jack up prices and make our power a lot less reliable. It's a terrible negative. They're not going to shut it down. You can't, just leave these things hanging out there. We're going to get these things going. I just got to see what the terms of engagement are. They change every day.
I know, but it sounds like you're pretty confident, Governor, that you can reach some kind of a deal. There was talk, and we don't know, that Empire Wind kind of got going back because of a nuclear agreement in New York State. Do you feel like if you made a deal to maybe put in a pipeline, because you're only about 200 miles away from one of the biggest natural gas fields in the world, that you might be able to get this kind of thing done?
Yeah, you don't have to ransom notice, though. We already support this. We're already talking to all the necessary players to see if we can bring some more natural gas by pipe into our region. That's not an issue for me. This was just a sudden and hasty decision. I think we're going to be able to turn it back.
Well, the pipeline issue is one that's not an issue for you, but it is an issue for a lot of people. And to your point about use, I look at the power generation, say, in like the New England region, right north of you, Boston, New Hampshire. A lot of times they're burning trash and trees to make power. That's not environmental, and it's not particularly clean. Or they're shipping in LNG on a ship from Trinidad into Boston Harbor. It's kind of weird. You obviously don't want to see that happen either.
No, those LNG ships sit right outside of Boston Harbor. They wait for Putin to invade Ukraine. You watch the price of natural gas through the roof. Then they come in and sell it to us at a 500% premium. One of the things wind does is give us 2.5% extra capacity that will mitigate those spikes. You know what those spikes mean? Higher electricity prices for you. Don't get in the way of that, President Trump. We've got to reduce electric prices in New England.
Connecticut Governor Ned Lamont sounds pretty rational to me, Governor Lamont. We're really glad that you came on. Thank you very much. Appreciate that, sir.
Nice to see you, Brian.
All right, good to see you as well. By the way, we're going to bring it back. President Trump making some very brief comments about Fed Governor Lisa Cook at that cabinet meeting at the White House. Here they are moments ago.
Legal action. What is your response? Are you prepared for a legal fight? And then a little bit more.
Oh, sure. Always. You always have legal fights. Look, I had a legal fight that went on for years with crooked people, with very horrible people, people that have been found out now between John Ratcliffe and Tulsi and Pam. And the things that we found out, of course, it's a very, very sad group of people. But no, she seems to have had an infraction, and she can't have an infraction, and especially that infraction, because she's in charge of, if you think about it, mortgages, and we need people that are 100% above board, and it doesn't seem like she was. Yeah,
Mr. President, first, I would love to ask you a serious question, but I have to.
All right, doesn't seem like she was 100% above board. Again, that is President Trump's opinion. Speaking about Lisa Cook and the allegations of potential, alleged mortgage fraud, again, it's just a big fight that's clouding the Federal Reserve right now. Again, we don't have a lot of information on it. We've heard reporting all day. The minute we get something, you'll get it. A lot of serious stuff going on. Coming up next, though, we're going to have some fun. Celebrity chef, entrepreneur, restaurateur, Wolfgang Puck. He is here. He is in studio. He will join us on the other side of this break, talk about where he got to where he is and where he sees his business and empire going in the future. That's next.
Crypto Watch is sponsored by Crypto.com. Crypto.com is America's premier crypto platform. Plus.
If I had a fork, it's not even cooked, I might eat it. If you're planning a Labor Day weekend barbecue, you're going to have to pay up a little bit more. Beef prices continue to hit new highs. But when we're looking, zoom in on this. Chef, entrepreneur, and restaurateur Wolfgang Puck joining us on set, and they said you were bringing meat. I thought they were joking.
No.
You bring meat.
Yeah, I said you were hungry, so the only thing is I didn't bring my charcoal grill so we could cook it. So next time
this
we
looks,
set it up.
honestly, this looks healthy and good enough to just eat. But what are we looking at here, and how are you, it's a business show, how are you managing through some of these beef costs?
You know, a great thing for guests out there, for our customers, is really to share things. For example, I brought here a Nebraska beef chop, or Côte de Boeuf, we call it. So you have that for 2 or 3 people. Then it's actually maybe $60, $65 per person. And obviously, if you go to Australian Wagyu beef, it's very expensive. Our Snake River farm, which is a crossing between Wagyu and Black Angus, they are also reasonable still, you know, in comparison to Wagyu. But this is really my favorite. Snake River farm, the New York, is perfectly marbled. You can see a great marble on it. You grill it, put a little salt on it. I know it's not a cooking show.
So it might turn into a cooking show if this because show is called Power Lunch, by the way.
Yeah, okay, so perfect. So next time we have a little lunch here too. So put a little salt, pepper on it, put it on the grill, and that's it. Because if the quality of the meat is great, you don't need a lot of different things. And this is all the cuts we have at our restaurant, Cut at the Four Seasons downtown here. And I must say, beef prices since January, especially with like Creekstone, especially with some beef from Nebraska, the prime beef, this is dry aged, have fallen like 15%. Though,
so you're seeing a little mitigation.
A little bit better, yeah. So it's not going, but you know, during the holiday season, it's always going to go up again. I can see that coming already.
Obviously, you're in L.A., you live in L.A., Spago's a legendary, but you got cut there at the Beverly Wilshire, you got cut here at the Four Seasons, but you're all over the world.
Yeah, but we continue to open, you know. We're gonna
Vegas, Bahrain, whatever, Asia. Are you seeing any slowdown at the top end of the consumer?
You know, I think the top end is still okay, but I think the middle is really where it's the most difficult. You know, you're not the top, you don't give great service. If you give people a great experience, if you have a great steak, maybe instead of going 3 times a month, you might go twice a month. But you know, once you like quality, you don't gonna settle for second best anymore. And I think that's really the most important thing. And I tell the guests, you know, eat a little bit less. Like I share with my wife a steak of 10 ounces, 5 ounces each. We have like 3 appetizers, and I'm totally satisfied.
Yeah, well, the American way, as you know, is a lot of it is give me a lot of food, give me a lot of food.
You get a thing like that for yourself.
I mean, easy, Fred Flintstone. I mean, by the way, I might pick that up and start chewing on it. So, where do you see other costs going? Meat is one part of your business. You've got labor, you've got wine, you've got utilities. We talk a lot about
utilities and insurance. You know, in California, the insurance is getting through the roof because of all the fires we had and everything. So nobody wants to insure you anymore. I think labor cost is getting through the roof. Like in LAX, we have restaurants at the airport and $30 minimum wage. So if I pay for the dishwasher $30, I have to pay the cook $40. Basically.
And we want people to earn a living wage because LA is a spectacularly expensive city. I was born and raised there. My parents' first home in Torrance was 3 bedrooms, 1 bath. I think they paid $61,000. The house is now like $1 million.
I know.
Still 1 bathroom.
I know.
So you have to pay up. So how do we? Is there a balance?
You know, there should be a balance, and I really believe all the workers out there, they should make a living. They should be able to live maybe 30 minutes away from where they work, not 2 hours away. I mean, I have people who drive 2 hours from and to their house.
They live in Victorville and they commute to Beverly
all the
Hills.
way out in the valley somewhere, and that's where they can afford a little house. In our neighborhood, it's impossible. I remember when I started, I was a chef at Ma Maison. I bought a duplex for $75,000. I know it was a little while ago, but still.
Yeah, still, I love it. Ma Maison, my house. So what would, we're going to wrap it up with this. What would, you've got all these different cuts here. What would Wolfgang Puck eat for dinner tonight?
So For me, I probably would eat, unless I'm with my son, Alexander, who actually just enrolled at NYU. So he's going to study there.
That's a big bill, by the way.
Yeah, you're right. Thank you for reminding me.
I'm sorry.
I know, nothing is cheap, so what can we do? So with my wife, we have the Snake River Farm, New York here, which is my favorite. We share it. Now, if I have the family, we always gonna have a dry-aged Côte de Boeuf or rib job here, and I slice it in, a little salt and pepper, maybe some French fries on the side and some vegetables, and you're very happy. You don't have to eat a lot of good beef. You don't have to eat a huge portion, I wanna say. You eat a little bit, but eat quality.
Has there been, this is a little weird, but I'm like sort of salivating, I'm sort of entranced by the meat. Is there any kind of Ozempic effect in your business, Wolfgang? People, have you seen it or felt it at all?
I think people eat beef, then they take the Ozempic, so they stay at the same level.
Yeah, or maybe they go out, but to your point, they'll eat a little bit less. I have friends that are on the shot, and they'll eat the same stuff they used to. They just eat a lot less of it.
That's what I hear. And I had one of our chefs is taking Ozempic, and he actually told me that it doesn't make you hungry, so you're not really feeling like you have to eat more. You eat a little bit and you feel full, so that way you lose weight. So I think one of the main things is we eat such large portions. You know, in America, more is more. I have people who come from Europe, and we give them like a New York steak here, like there's Creekstone, New York here from Kansas, and they think, is that for two?
Yeah, I know.
And in Europe, 8 ounces of meat is
a lot.
A lot.
Any of this tariff? Do you see a tariff impact in avocados from Mexico?
Yeah.
What are you seeing on the tariff side?
Well, in California, we are still lucky because we grow in Fallbrook and everywhere avocados too. But, you know, because of the prices, they imported a lot from Mexico and people farm less. But we have more and more small producers for beef, which is really good for us. And now they specialize, even in America, even in California, they raise Wagyu cattle. You know, not as good as Japan yet, but at least the quality is good. And Snake River Farm has shown that you can really do a great beef by mixing Black Angus and Wagyu together, and you have the flavor of the beef, what we like in America. You know, we love this prime beef, dry-aged beef, but also the richness. So it's a perfect combination.
Quickly, immigration. You got the White House probably watching, or policymakers. What would your message be on immigration?
Well, I really believe, you know, we need immigrants, but it has to be controlled. You know, we cannot do like we had a year ago where we opened the borders, anybody can come in. And then when I tried to get a qualified person from France or Italy or Japan, they said you have to wait 1 year.
So we'll fix that. But in the meantime, we'll enjoy this. Wolfgang Puck, delaying your flight home.
Yeah.
We really appreciate your time today, sir. Thank you very much. Eduardo, the great chef from the Four Seasons Cut here
downtown,
in downtown New York, is here in the house as well. We need to get a grill. We're going to go to break. We're back right after this.
At Invesco.com.
All right, before we go, I want to highlight the most read story on CNBC Pro today. Our colleagues wrote an article about what happened to the financial markets after Richard Nixon pressured then Fed Chair Arthur Burns to loosen monetary policy before the '72 election. Wow. To read that story and many more, go to cnbc.com/pro. Become a Pro subscriber today. I don't know about you folks. I'm really, really hungry, but I got to go do Fast Money. I'll see you at 5 p.m. Thanks for watching Power Lunch. The closing bell starts now.
Brian, thanks so much. Welcome to Closing Bell. Scott Wapner live from Post 9 here at the New York Stock Exchange. This make or break hour begins with 24 hours of AI anxiety. That is what lies ahead at NVIDIA as NVIDIA earnings loom especially large tomorrow. Results that could very well make or break the next move for the tech trade. We will discuss with our experts over this final stretch what is really at stake for this market. The scorecard looks like this with 60 to go in regulation, mostly modest advances today for the majors. Not much reaction to news. The president says he's firing Fed Governor Lisa Cook. She says not so fast. We will watch for any developments there this hour. Watching Apple shares too after yet another report says the company entertained the idea of buying AI startup Perplexity. Dive into that further as well. It takes us to our talk of the tape, the next leg of this record-setting rally. It's clear where our headliner stands on that topic. He's bullish, as you know. He is Fundstrat's Tom Lee. Joins us now at Post 9. It's good to see you.
Great to see you, Scott.
NVIDIA looms large. Does that make or break whether your bullishness comes to fruition moving forward?
I know investors are really anxious, and NVIDIA has not performed well the last few times it's reported. But the story arc there remains that is one of the most important companies in the world in the middle of the biggest structural change in the world economy. So I think NVIDIA still is a great story. It really wouldn't change our thesis if the stock reacted poorly.
You feel like there's become a little more AI anxiety, as we wrote at the top? From Sam Altman at OpenAI saying that, investors are a little overeager about AI. Meta's reorganized again. They've stopped their hiring. There was another report today that suggested some of these Gen AI models are failing. You think there's anxiety in this market about this trade?
Well, I think everyone's trying to get situational awareness. Like, is this inning 1 or 2 or late innings? Because we know there's been a lot of value creation and a lot of capital that's flowed in. And we know that Silicon Valley has seen a boom of companies with $100 million annual run rates, like in record time around AI. And a lot of people want to ring the bell at the top. But to me, it still feels really early because there's such a limited number of stocks that public investors can buy that represent a direct play on AI.
I know, but that could lead to bubble-like activity, right? When your pool of investable opportunities remains so small, all of this money rushes to a select few, and then they have to live up to all of that hype and give a great return on these hundreds of billions of dollars that are being invested. That's not a risk?
Well, it is a risk. I guess that's really the next stage of what we have to see is how does the market accept now adding to the roster of direct AI plays, beyond just Figment. And I think, if we look at the next 12 months, there'll be a bevy of IPOs, some really big companies that are later stage. But if they're bought and they produce good growth and their stocks perform well, I would still say that still means we're early innings.
That's still your favorite trade?
I think it's the most important trade, yeah.
I know it's the most important. I feel like that's legit. But is it?
I think there's bigger upside in owning financials right now. Because financials are benefiting from AI.
Okay.
So they're the second order beneficiaries. Plus they're getting the green light to build on the blockchain, which could really make JP Morgan and Goldman's business models so much more profitable and change their multiples, expand them. So I think, yes, I'm still bullish on AI, but I actually think the financials are really one of the legs that drive us the next 12 to 24 months.
Oh, interesting. No matter what the Fed does from here, does the rate picture matter for the bank stocks?
It does, because it helps. It provides the liquidity to sort of liquefy housing and corporate lending and bring spreads down. But I think the financial sector has produced visible earnings growth for a long time through these cycles, and they are trading like cyclical stocks. JP Morgan and Goldman should maybe have tech multiples, and so I think there's upside for financials.
aside from when the broadening started to happen on the idea of rate cuts, those were the type of stocks already that were leading this market along with the mega caps. This is a large cap stock rally,
Yes.
right? I mean, industrials,
Correct.
the biggest names out of the industrials, the biggest names out of the financials, the biggest names in tech were leading the way.
Yes.
Do you think that continues?
Yes, and because, at the end of the day, when you look at GDP, for every unit of economic activity, there's one unit of financial. So financials are half the economy, but they're not half the index. Now, I'm not saying they're going to get to half the index, but they really should re-rate. I mean, I think even this quarter, right, the numbers from JP Morgan, Goldman, and the financials, and look at the bullish IPO, these are all good signs to me that you want to be overweight financials.
Does the calendar matter for the market, right? September is historically a bad month. We like to look at the seasonals. Some people do to determine, what they want to do. Do you follow that much?
Yeah, I care about the seasonals because that we know becomes the base case for investors, just like August was a month everybody was wary. So then what you have to build in September is, are there things that can be positive surprises for markets? And to me, that's going to be the Fed.
A positive surprise?
Well,
a surprise at this point?
Okay, a positive versus the base case. Because if you look at all the Septembers in the past, this time is a Fed on hold that's finally cutting. So that makes this September better. And then the idea the ISMs could recover, which really doesn't usually happen in the fourth quarter, but it could finally happen. We've had 29 months of the ISM below 50. So I think that we could have a better than expected September, October, November, December, because of the Fed cutting and now the ISM turning.
Yeah, I mean, but not just ISM, right? We got to watch jobs again, and we have to look at the inflation prints again.
That's right. Yeah, and that's where we have to rely on the Fed to make good decisions, and Fed independence being critical because we want the Fed to do what's right for the economy.
Some say Fed independence is already shot. And today, or last night's news of the president moving to fire the governor, Lisa Cook, is the nail in the coffin of that conversation, at least for now.
I hope that's not the case in the sense that...
Not the case of what? That he actually fires her? Or that it's marks the official end of Fed independence?
Both, actually, Scott, because I think that there's a window for this to have a dignified ending or outcome for Cook, and I don't know if that means people take a step back and reverse what they've done, or if that means Cook is allowed to resign. I think it is important for that to be a process the market accepts, because you're right. I think the market would get very nervous about Fed independence being questioned.
Okay, on that note, let's bring in Steve Leisman. He joins us on the phone. Steve, we have a statement now from the Fed. I've been wondering when they were going to say something on this topic, and in fact, they have. What are they saying?
I'm just reading it now, Scott. I didn't know it was going to come out. I have it now. It looks like they're saying that Congress directed that governors serve in long fixed terms and may be removed by the president only for cause. Long tenures and removal protections for governors serve as a vital safeguard. The Fed will continue to carry out duties as established by law. Lisa Cook has indicated through her personal attorney she will promptly challenge this action in court and seek a judicial decision that would confirm her ability to continue to fulfill her responsibilities. The Fed will abide by any court decision. The Fed reaffirms its commitment to transparency and accountability. So it sounds like they're backing her, Scott, in terms of her ability to challenge this thing in court and not take any action against her until there's a court decision. That's what it sounds like. And it sounds like they're, essentially not embracing the president's decision to call this cause. They're not embracing the president's own explanation for firing her for cause and saying this is not cause, and they're waiting. They're saying Cook has indicated that she will promptly challenge the action in court and seek a judicial decision that would confirm her ability to continue to fulfill her responsibilities. So they're going to wait until there's a court decision either way.
So where there was some speculation, conjecture, or what have you that, well, how is the Fed chair himself going to deal with this? Does he, make a move to ask, Governor Cook to step down? This is absolutely sounds to me the opposite of anything close to that.
It doesn't sound like that. I agree with you, Scott. It doesn't sound like he's saying to Lisa Cook, step aside. It sounds like, a bit of a punt, perhaps, is one way to put it. Like the Fed chair making a decision, he doesn't have to make a decision. Let the courts decide, and what the courts decide, the Fed will abide by. I would just note, Scott, that the Fed chair does not have the authority to remove Lisa Cook. Only the president does. And what the Fed is saying, the president does only for cause. And that seems to be the distinction the Fed is making here, and not really accepting that the decision by the president is for cause.
Were you surprised at all? And frankly, I was, that, the president's move was so many hours ago, and we're just now getting a statement from the Federal Reserve about one of its governors being fired by the president of the United States? What took so long?
Scott, I think I might throw it back at you and say my knowledge of the Fed is such that I'm surprised I have one today. To the extent that I know they act very deliberately and they're very carefully considering their options here. I think that they have not wanted to be involved in this political scrum or even in the legal scrum here. And it's a very, very difficult position for them to be in the sense that somebody has been accused of something, but not convicted of it. There are allegations here. And as far as I can tell, Scott, there's been no investigation, only the investigation of the applications. And I have asked FHFA to whether or not they've ever spoken to Cook. And I don't have a response from FHFA or Bill Polkey if he has ever asked Cook what her side of the story is. And I think what I'm seeing here is the Fed is not going to get involved. Let the courts decide whether or not, A, there's a real allegation here or a real crime that's been committed. And B, is another question, Scott, whether or not this rises to the issue of cause.
What about to the idea that this now just becomes yet another distraction that Chair Powell has to deal with? You've got questions over the construction costs. Now you have questions over alleged activity from Governor Cook. All of it, of course, superseded by the idea of the president calling out the Fed chair and the central bank itself for not cutting rates in the time frame that he wants them to.
Scott, I think you're right that it's a distraction, but the question as to what is a distraction is really one of subjective interpretation, in the sense that you could argue from Powell's standpoint, from the Fed's standpoint, that the sanctity of its independence is anything but a distraction. That, in fact, what they're fighting for here is the whole enchilada. And that you might even argue, Scott, that none of the other stuff matters if the result is the Fed can be pushed around to interest rates, if allegations can cause the Fed governor to lose his or her job. And that ultimately what you're talking about is a Federal Reserve that is subservient to the administration and the political whims of a single president. That is hardly a distraction. That is the main point.
Steve, we'll leave it there. I appreciate you calling in and in real time reacting to this statement that we've been waiting for from the Federal Reserve. So we'll continue to follow that story. Do you want to sort of comment on this now that you've gotten this statement and it is a real concern of yours?
Yeah, I think it's actually a balanced statement, because I think the Fed's message is there's the court of public opinion versus the court of law. And if the court of law determines that there was cause, the Fed would actually support the decision. But I think they're making clear that there's just an accusation. But of course, there's a process to determine whether these accusations are true. So I think it's actually an appropriate response. And it does sound like it would be something acceptable to both sides, because it is simply just saying if this is true, then there is cause.
On the face of it, I would look at the market activity today and say, well, the market's just not really paying attention to the noise around it. But then if you look a little closer, I'm thinking, well, the Russell's outperforming today, up 0.8%. Is that on the idea that if the president is successful in removing Cook, you're just one step closer to filling a seat, and a very important one at that, with somebody who's predisposed to cut rates, and that's a rate cut play?
Yeah, sort of true. I'd actually think that the Russell's up today because the market's concluding the Fed can operate uninterrupted to proceed with a cut in September. Because I think if Fed independence is questioned and there's a risk even Powell's replaced, that would be a risk-off moment, and that would be the market we should see the VIX spiking and a general de-risking into a sloppy September.
All right. Stay with us. Let's expand the conversation. Bring in Liz Thomas, SoFi's head of investment strategy, Matt Stuckey as well, Northwestern Mutual, joining us. Liz, you want to just weigh in on how you're thinking about this issue? I don't want to just brush past it so fast. I mean, it's such a significant event in a group of events with this president and how he has reacted towards a Federal Reserve that hasn't cut rates on his schedule and has attacked the chair in ways that we've never really seen before. And in some ways, this move last night is unprecedented in its own right. And how, as an investor, you care or you think people should?
Well, I do think people have to care. I mean, we're talking about the independence of the Fed here, and we're talking about what is going to affect financial markets and the voting members of the Fed that absolutely affect financial markets. But I completely agree with Tom. I think the Fed took a good balanced approach with this to almost say, you know what, this isn't our decision. We're going to put this in the hands of the people who need to make this decision. Whether it's a distraction and they're frustrated by it or not, I imagine they are. However, it is the right thing to do to put it in the hands of who needs to choose how we proceed. It's unfortunate that we're going through this so close to a very important Fed decision on September 17th. I don't think that it will change what that decision will be. I think it was very clear at Jackson Hole, we're getting a cut, absent some really big shock or absent some series of shocks in the data to come. But even if we do see some hotter inflation prints, PCE this Friday, CPI before the meeting, I still don't think that changes the fact that we're getting a 25 basis point cut.
Matt, on the scale of concern, where does Fed independence rank for you as it relates to where you see this market heading from here?
Yeah, sure. I think Fed independence is critical for investors. If we look at, the growth of capital markets in the United States, the strength of the U.S. dollar, they're all intertwined. And so independence at the Fed is something that I think every investor should want. And I would agree with Liz in terms of the comments that she made in terms of what the Fed is messaging here. I think the message is we're going to step back and let due process take its course. And I think that's the appropriate message.
We have a new statement, actually, from the White House on the firing of Governor Cook. Megan Kinsella joins us now with that. What are they saying?
Hey, Scott, so this is really the first time we're hearing the White House respond to some of the statements today from Cook, saying she will challenge this in court. A White House spokesperson saying in a statement to CNBC, the president exercised his lawful authority to remove a governor on the Federal Board of Governors for cause under the statute. The president determined there was cause to remove a governor who was credibly accused of lying in financial documents from a highly sensitive position overseeing financial institutions. So obviously these are allegations. Nothing has been proven. The Justice Department did say they were looking into these allegations against Cook. We also have heard the president a couple of times responding to reporter questions so far today in that cabinet meeting that is still ongoing. Most recently, he was asked whether he would abide by a court decision on this, and he did say that he would abide by any federal ruling or any court ruling, I should say. But earlier on Cook, he said she seems to have had an infraction and she can't have had an infraction, especially this one, given that it has to deal with housing and she oversees housing as part of the Fed portfolio. Scott, so more from the White House on this, but standing by the president saying this was lawful authority to make this move.
All right, Megan, thank you for the latest there. Megan Kinsella. Liz, what I hear you saying is irrespective of this particular move, the move that matters more is the Fed's going to cut rates. And they're probably going to do it in September, whether Lisa Cook is part of that conversation or not.
Yes, and I don't think that this changes that. I'll reiterate. I don't think that this Lisa Cook situation changes the trajectory of what the Fed is planning to do in September.
Well, is that why the market is reacting the way it is, albeit not with some, huge move higher, but we're green across the board, and we might otherwise be, looking at red across the board if there was some deep concern over this issue in and of itself?
Well, I think the market is reacting rationally. There isn't really much of a reaction. It's almost the absence of a reaction to it. We don't know what's going to happen, and I think the market realizes,
it doesn't necessarily matter what happens with this in the next couple weeks. What we are going to react to as market participants is if we get data that stops supporting what Powell messaged at Jackson Hole. So that being said, I still believe even if we get some hot inflation prints, he messaged that we might get some hot inflation prints because of tariffs. And that is likely to be a shorter term shock. We're going to monitor the situation. So even that probably doesn't change September 17th. I think the thing that we will debate, let's say data comes in much cooler than expected in these next three items. What we will start debating again is it 25 or 50? I think it's 25. I think it's 25. I don't think we're getting 50. I don't think they have to do 50. And I don't think the bond market is telling them they have to do 50.
Matt, all of this conversation and these new headlines has really overshadowed what is a critical earnings report tomorrow from NVIDIA. How are you thinking about that? A bar that's been raised by a stock that's up near 40% over the past few months into this print.
Well, not only is it up 40% over the last few months, it's up over 90% from the April lows. And, just kind of going into the result tomorrow afternoon, the valuation is higher versus the last couple of prints, about 6 turns higher on the forward earnings multiple. And earnings estimates have risen about 11% just in the last few months. And there's more of a tricky kind of setup as it relates to what kind of guides we should be expecting. And really, the open question mark is China-based revenues. Or will they enter into the Q3 guide or not? I think that could be potentially up to a $3 or $4 billion swing factor in terms of the number that's posted. But this might be one of the setups and reactions where what's on the press release might not match up in terms of what's discussed on the call in terms of what type of recovery timeline investors should be expecting in terms of reintroducing China revenues back into the fundamental story for NVIDIA.
Tom, you want to just put a bow on that, reacting to that?
Yeah, I might say that investors have been now patterned and bracing for NVIDIA to sell off after they report tomorrow. And yet, I think the visibility and I think the conviction on AI is actually stronger. So I think there's a chance NVIDIA rises dramatically after they report Wednesday after close.
Okay, that's a bold statement from somebody who's not afraid to make them. Tom, thank you. Liz, good to see you as always. Appreciate your patience. Matt as well, as we had that breaking news. We'll see all of you again soon. We're just getting started. Up next, investors buzzing about what could be a big deal for Apple. Kovac and Kantrowitz, they are back. Standing by with the details on the conversation. We're live at the New York Stock Exchange. You're watching Closing Bell on CNBC. Welcome back. It might be the most talked about, yet to be executed corporate deal ever. Apple buying the AI startup Perplexity. Yet another report today says Apple executives were in fact mulling it. We've discussed the topic so many times before with our own Apple reporter Steve Kovac and Big Technology's Alex Kantrowitz. We're bringing him back for more because there's more headlines. Guys, it's good to see you. AK, I'll begin with you because you're the one who sat right next to me here and said no brainer. Apple should do it. Yet another report now says they were talking about it. What do you think?
I think it's still a no-brainer. If you think about what Perplexity does, it takes the leading AI models and it turns them into products. Actually, the product that it's using the AI models for, number one is search, but it's also done assistive type applications and AI voice, right? I think a lot of people are going to start speaking with AI with their voice as opposed to chatting with them. And I'm of the belief that most of the leading AI models are going to commoditize. And if that happens, what do you want to do? Do you want to be building these leading large language models, or do you want to be building the best products that you can with the technology? And I think Perplexity has shown that they really know how to build AI product. You take a company like that, you bring it into Apple, which has the need and the distribution, and you're looking at a very productive marriage if you can get the culture synchronization right. And I think that's the hardest part. And I think that's why Apple has hesitated here.
Well, I don't know if the courtship is going to turn into matrimony. I mean, it doesn't sound to me, Steve Kovac, from what you've already told me on whatever program we've had this conversation, that smoke doesn't necessarily lead to fire in this case.
Yeah, and the M&A team at Apple, they kick these things around all the time. This report that we're talking about now, once upon a time, they were looking at Tesla. They were looking at so many other companies, these major acquisitions. But we know this already, Scott. Apple does not like to do that. This doesn't seem to be the direction they're going in. I'm sorry, Alex. I know you really want it to happen, but it doesn't seem like they want to do it. Instead, they're looking to partner or license the technology from one of these major LLM providers. Right now in the running, it seems like OpenAI, Anthropic, and last week we got that report that Google Gemini is in the running. And the clock is also ticking, Scott, because any day now, the Department of Justice, or I'm sorry, the judge in the DOJ case that Google lost is going to decide remedies and the fate of that relationship between Google and Apple. And look, Apple is still very attractive to these LLM makers because there's a huge distribution system for them. There's over 2 billion devices that can get their LLM on. And right now, it seems like Apple is really focused on not necessarily acquiring their way to it, but doing what Perplexity does, building on top of these LLM models and doing it themselves, because the Apple intelligence model just has not worked out. It is well below par and well underperforms all these others.
Which, Steve, would suggest that maybe desperate times call for desperate measures, whether one would consider this to be a desperate move or not. It would certainly be out of the norm. It would be a company that doesn't like doing large deals. The biggest deal it's ever done, of course, is Beats. They're sitting on a mountain of cash.
Yeah.
Maybe they should, because they have no choice.
And there's a huge camp that's been saying that about Apple for so long. They need to acquire, they need to buy, they need to do something other than acquiring their own stock. And we've just seen over and over again throughout Tim Cook's tenure, they're just allergic to that. They don't want to do that. This information report had some really good details, how Eddie Q is kind of in that camp. He really is pushing to do a big, bold deal in artificial intelligence. We also heard from Tim Cook a couple weeks ago. I was in the same room with him asking him about this. What are you thinking about artificial intelligence and M&A and how that applies? And he kind of gave me the same answer he's been giving for the last decade or so when people ask him about M&A. So we'll make the decision and we'll make an acquisition if it makes sense, if it's additive towards our product roadmap. Sure, Perplexity could do that, but also part of their product roadmap could just be licensing one of these LLMs. That really seems to be the direction they want to go in before spending, I don't even know what it would cost to buy Perplexity, at least $20 billion or more. I mean, I think they're at well above that valuation now. That's a huge chunk of money. We should also note that Tim Cook doesn't think this battle is over, Scott. He sees it as a much longer term. There's a Bloomberg report a couple weeks ago that he told staff in an all-hands meeting that he thinks the AI race is still up for grabs and it's still theirs to win. So we haven't seen anyone really leapfrog Apple in a meaningful way as far as besides OpenAI. So there is still potentially time for them to figure this out next year.
It sounds like according to Steve Kovac, AK, that Apple or Perplexity is going to be left at the altar.
Well, that may very well be the case. And I think a lot of things are correct here. I think Tim Cook is right in saying that we're early in the AI race. I think partnering would be a great move for Apple early on. But I think underlying all of this is a question for Apple. And that is, what type of company do you want to be? Why is it that so many acquisitions have failed or have not taken off underneath the current regime within Apple? The report that we talked about at the very beginning of this segment is an information report that had a founder who sold his company to Apple, setting up a clock at his desk, waiting for his time to vest his shares to be over so he could leave and do something else. I don't think a company, any great company, is going to be it won't be humble and say, there are great ideas and they might be coming from within us, but they also might be coming from without. If you don't believe that the ideas can come from without, then you're going to eventually be lapped by the competition. Maybe it's not today, but over time it will be. And I do think that AI, whether it's in the form of generative AI or some other form that comes down the line, will transform the way that we interact with computing. And if Apple is not humble enough to say, hey, maybe we don't have all the answers, maybe we need to restructure our culture to be one that accepts ideas from outside, that is going to spell long-term trouble for Apple. So whether it's Perplexity or whether it's something else, I think the company really has to look in the mirror, ask what type of company it wants to be, and I think to survive long-term, it's going to have to be a different one than it is today.
We knew it would be worth getting the band back together again. Alex Kanchowitz, Steve Kovac, thank you very much. We'll see you soon. Up next, we track the biggest movers as we head into the close today. Christina Partsinevelos is standing by with that. Hi, Christina.
Hi, well, we have one telecom stock rocketing 70% on a massive spectrum deal. We'll reveal who after the break.
NBC Plus.
Got 25 to the bell. Back to Christina for the stocks that she's watching. Top of your list is what?
Eli Lilly, because it's on pace for its best day since April after it received positive late-stage trial results for an oral weight loss drug that means a needle-free alternative to GLP-1s like Ozempic. The CEO of Eli Lilly, David Ricks, told Squawk Box earlier this month that the pharma manufacturer was really hoping for approvals around the world, quote, this time next year. Shares are up over 5%. AMD also jumped after Truist flipped to buy with a 213 price target, saying the chipmaker is evolving from NVIDIA's, quote, price check to an actual partner for major cloud providers, which is a game-changing shift if it holds true. Shares up almost 2%. And last but not least, I teased this, but the shares of the telecom company EchoStar are surging over, look at that, 71% today after a $23 billion deal with AT&T. AT&T agreeing to purchase certain wireless spectrum licenses, which helped expand their service and data speed in more than 400 markets across the U.S. The deal is expected to close in mid-2026, of course, pending regulatory approval, most likely going through, which is why you're seeing the shares really pop today. Scott?
All right. Thank you, Christina Partsinevelos. Up next, Rockefeller Global Cheryl Young is back to break out her tech playbook. We'll find out what she thinks about that sector now. So join us next.
you
today. NVIDIA's earnings in overtime tomorrow could very well hold the key for where the tech trade heads from here. My next guest is cautious on that. Joining me now, Post 9, Cheryl Young, Rockefeller Global Family Office Private Advisor. It's good to see you again.
Thank you,
You
Scott.
sound like you're a little cautious kind of on everything right now in this market. You said, and by the way, it's hard to find people who are cautious now. Feels like so many people are on the same side of the boat. What has you so cautious?
You know, Scott, I'm a rock climber, and I spend a lot of time in Tahoe. And when I go up one pitch, I get nervous. If I go up two pitches, I get a little bit more nervous. As I go higher and higher, the more I really care about making sure my rope's intact. I know where my belayer is. I've got eyes on all my gear. And this market has come up a lot this year. But it's interesting because people are saying the markets are coming up a lot this year. But it's not really the market.
That's right.
It's just a couple of stocks.
Well, I mean, it's a little bit broader than that, in fairness. And there seems to be good reason. I mean, earnings were way better than expected, so the multiple doesn't appear as egregious as some maybe thought it was. The tariffs don't seem to be causing the kind of inflation that the worst fears were centered around.
Yeah,
and despite the noise around the Fed, they all but are telling you they're going to cut rates soon.
Powell opened the door Friday, right? I think that his tone is a little bit more open to it. But he's got, as our CEO said, he's got a little bit of a tug of war. You know, you've got job numbers which are not terrible, but not as good as we'd like.
Mm-hmm.
And the inflationary numbers, if you look at the consumer confidence index that came out this morning, we have inflation as an estimate at 6.2 increase over the next year. So it looks like everybody thinks inflation will go up because tariffs are just now starting to show some effects.
You think stocks are overvalued, just straight up?
I think stocks are overvalued straight up. But again, looking at the index and the P on an index is really tough when it's just a handful of names. If you look at most of the S&P 500, earnings fell 5.2% year over year. It's not up. Again, technology has carried this market, and it's becoming a crowded trade. I get very nervous when I get into, a taxi car in New York, and everyone's saying buy Palantir, buy NVIDIA, buy two stocks, right? There are more stocks to the market that are important to watch.
Do you think there are more stocks in the market that are worthy of being bought today? Or are you just negative across the board?
I do. Look, healthcare is up not even 1% this year, right? And actually, EPS on the healthcare stocks increased nicely year over year. But there has been no participation in healthcare stocks at all. And if the AI boom is real, it should help sectors like healthcare quite a lot.
Do you think the Fed's going to cut rates in September? And if you answer that question yes, then presumably you believe in all of those stocks in an area of the market you say hasn't participated actually joining the party.
Yes, look, I mean, I've been preaching go with an equal weight index all year over a market cap weighted index because that market cap index has gotten, again, really, really crowded on those trades. So I do like the equal weight better than the market cap weighted index. Where I get nervous is that I do think they're going to cut rates in September. I think we get 25 basis points, not 50. The markets as of Friday were pricing in 100 basis points until, call it June of next year. I'm just not sure we get that much. I think there still could be, again, that tug of war between inflation and jobs. And the Fed has a dual mandate they have to answer, and it's very, very difficult. You also have to remember in 2021, everyone's accusing Powell of getting it wrong. We were behind the curve on inflation. So if they get behind again, inflation starts taking off, and they have the same catch-up, we saw what happened in 2022.
But I mean, ultimately, they're going to have to make the best guess that they can, and they seem to be leaning in the direction that inflation is going to cause this one-time price increase. You don't buy that?
First of all, I don't see how 25 basis point makes that much of a difference.
Well, it's the start. It's not the end.
It's the start. That's
your
correct.
Your fear sounds like, though, it might be the end. Like, for a while, they cut 25, and then they're like, well, let's wait and see.
I think they've got to wait and see. I think we might get 50 basis points this year, but then it's going to be a wait and see story that has to play out. And again, going back to how many companies beat earnings this quarter, remember, 85% of companies beat in Q3 2021. And again, 2022, we saw a 27% peak to trough decline in the S&P.
You feel like tomorrow is a seminal moment for the current state of the AI trade?
Look, it's interesting because this MIT report just came out on the AI trade, and it sounded disastrous, right? 95% of all companies saw no results, big fat zero, right? So there's a lot of worry that there's a bubble, even some altman.
That's right. Yeah, we've talked about that.
Bubble territory. And again, where the issues are, there's still a lot of hallucinations. 7 to 12% of all large language models are seeing hallucinations. That's a problem. And it's an overconfidence problem. If you have 99% things that go right on your data, but 1% that doesn't go right, how do you believe the numbers? And so there's still some work to be done.
All right, we'll see you soon. Thanks for coming by. Cheryl Young joining us once again at Post 9. Still ahead, Boeing shares are soaring today. We'll tell you what's behind the bounce coming up. We've got a market flash on United Health. Steve Kovac with those details. What do we know?
Yeah, Bloomberg just reporting now, Scott, that the Justice Department is expanding its criminal probe here into United Health to include the prescription management services part of the business. That's on top of the Medicare investigation as well. And they're looking into how the prescription management services pay doctors within the network. Not a lot of other detail here, but we know UNH has been under investigation for a wide variety of things right now. And we see shares down better than 1% on this new report, Scott.
Steve, thank you. Steve Kovac up next. We'll run you through what to watch for when PVH reports their earnings in overtime. The Market Zone is next. We're now in the closing bell market zone. CNBC senior markets commentator Mike Santoli here to break down these crucial moments of the trading day. Courtney Reagan standing by to look ahead to PVH's results in overtime. Plus, we have a big move in shares of Kohl's that we're going to get to. Phil LeBeau will join us too on Boeing. Court, we're going to come to you first. What's moving Kohl's here?
Yeah, Scott. So there's a headline here crossing from Bloomberg saying that Kohl's is asking at least some vendors for more time to settle its invoices, which is something we do see retailers do from time to time when it comes to a cash management strategy in a way potentially to conserve cash. We have reached out to Kohl's for comment, and we will let you know if and when we hear more from them. But as you mentioned, we are also expecting to hear from PVH after the bell. Of course, this is the parent of Calvin Klein and Tommy Hilfiger. We're expected to see revenues grow more than 2% to $2.12 billion for its second quarter on earnings of $2.01, with total gross margins expected to come in at 57%. Now, shares are up about 20% quarter to date. That is double the performance of the XRT over that same period of time. But despite PVH beating expectations for the top and bottom line most quarters over the past 5 years, shares have been pretty volatile in reaction to results over the past year. Analysts point to strides that have been made by CEO Stefan Larsson and his team to reinvigorate its brands, but acknowledge there's still significant work to do. Last quarter, Larsson noted a, quote, increasingly tough macro environment, but sharpening focus on what it can control, pushing forward on that PVH Plus plan, which includes its never out of stock program, which of course can lead to a stock up in inventory. So we're going to see what that's going to look like when we get those results after the bell, of course, when it comes to the impact of the tariffs as well as that plan for its inventory itself. And the wholesale environment, we know it can be tough. Last quarter, PVH, though, did see some growth there. We'll see what happens this time around. Scott?
Court, thank you. Courtney Reagan. Phil, what's moving Boeing today?
The order that was announced last night, Scott. This is a deal that was announced when Korea and the United States met at the White House. And that when those leaders met, what you had was an announcement about a big deal from Korean Air, ordering more than 100 planes from Boeing. Not a huge surprise here that a deal was announced. That was expected. There are more than 103 ordered, or 103 total, including 50 737 MAX 10s. Book value just over $36 billion. As you take a look at shares of Boeing over the last year, the backlog is now almost 6,000 planes. But look at that move, Scott. We're headed towards a fifth straight month, the best since 2018, where Boeing shares moved higher. Also take a look at GE Aerospace. Korean Air, as part of this agreement, has also struck a deal with GE Aerospace for $13.7 billion for engines and services. Scott, back to you.
Phil, thank you very much for that. That's Phil LeBeau. Mike Santoli with me now. The market seems to me to be just fine with letting this Lisa Cook thing play out while keeping its eye on the prize of rate cuts. I mean, otherwise you wouldn't have highs of the day, or more or less, for the majors.
I always ask when you get these very kind of noisy, disruptive-seeming policy or political headlines, what specifically should the market be repricing today as a result of this? And I think the market's coming to the conclusion of not very much, maybe just an extra little push in the direction of expecting a bit more dovishness if this all plays out in a very specific sequence down the road. But we already were pricing in a likely cut in rates in September. So I don't think it's really a change of the story. Maybe it's just a difference in emphasis. And then in terms of the hypotheticals about Fed independence and how much that's worth to the market, I think it's kind of like it'll become critical when that manifests itself some way in a policy error of some kind that seems related to that. So for now, not doing much. We're kind of holding to the conclusions the market arrived at on Friday. As we said, Powell's speech, we lean a little bit dovish. The economy seems okay. Durable goods were fine today. Little softness in the consumer confidence, labor market indicators. That's similar to what we've been wondering about for a while. Breadth is basically okay. Small caps are up. It's another half turn in the direction of the rate cut broadening type trade. And industrials are up. And so if I go down the checklist and say, is this a healthy type move or is this something to be worried about? I would say cyclical leadership, global participation to the upside in other equity indexes, and steepening of the Treasury yield curve, but in a very manageable range so far, I think is the rule. If I were looking for something to worry about, don't know, Microsoft's down 10% in 3 weeks. Tell me exactly what's going on there, unless it's just coming off the boil. And then, some of the red hot stocks have started to cool a little bit, along with parts of crypto, but it doesn't seem to be really undercutting risk appetites. And NVIDIA is holding this market in place.
Well, I was going to ask you about that. If you go down your checklist, right, the last thing on the list is what's tomorrow, and that's NVIDIA, and how all that plays into what happens from here.
I wonder about the piling in. Look, we're about 1% from the highs in NVIDIA. The stock is a double from April 4th. I mean, it's a monster move. It's added a couple of trillion in market cap in a hurry. So obviously registering really good confidence about what the guide is going to look like, the revenue trajectory. It's all that matters. You have to add tens and hundreds of billions in revenue to NVIDIA over the next few years to underwrite where the stock's trading for right now. Market seems comfortable with it 24 hours out.
Well, the markets have had this amazing ability to cut out a lot of noise. We did it again today. We're not going to have a new high on the S&P, but we're not that far either. And not that far off the highs, for that matter, for the Dow. I'll see you tomorrow into overtime.
Well, that bell marks the end of regulation. SS&C Alps advisors ringing the closing bell at the New York Stock Exchange. Nutex Health doing the honors at the NASDAQ. Stocks closing in the green. The Dow erasing a nearly 90-point loss early in the session as investors digest President Trump's latest attempt to reshape the Fed and get ready for NVIDIA's earnings tomorrow in overtime. Industrial is the top-performing sector, led by Boeing, which announced a big plane order from Korean Air. And oil falling more than 2%, dragging down the energy sector. Halliburton and Devon Energy among the biggest losers in the S&P. That's the scorecard on Wall Street, but winners stay late. Welcome to Closing Bell Overtime. I'm John Fort. Morgan